markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. I'd say uncertainty in earnings in the driver's seat for investors right now. The major averages, right now they're all pushing lower, but off the worst levels of the session. Worst performing stock of the S&P 500, that belongs to Palantir Technologies. The shares they're sinking, its results failed to live up to some of the elevated expectations. Is down over 14.5%. And then the best performing stock, we'll go to Constellation Energy. Crummy earnings, but they're keeping their guidance, and they also say their Calpine deal, that is still on. And Ford Motor suspended its guidance, also said auto tariffs will take a toll on profit. But Ford this morning, those shares up 3.9%. Overall, the S&P 500, 28 points lower. That's down 0.5%. We're at 5621 on the index. The Dow Jones Industrial Average down 173 points. That's a decline of 0.4%. And right now, the Nasdaq 164 points lower, and that is down 0.8%. So Instacart thinks this is a new way, apparently, to throw a party. They're launching an app for multiple users to contribute to one order. You pay for your own stuff and have it all delivered together. So,
okay.
You know, usually I just bring a bottle of wine or some shrimp.
Box of wine.
Box of wine. So it depends on the party I'm going.
Yeah,
if I'm going to the Hamptons, it's a bottle. Jersey Shore, it's a box.
So
anyway,
this is all fair.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out there. So it took longer than expected, but Germany now has a chancellor. Ross Matheson joins us, Bloomberg News Director for Europe, the Middle East, and Africa. Ross, like most Americans, I woke up to this news and then I was like, is that a big deal? Apparently it's a big deal not getting kind of elected on that first ballot. Can you give us the context there?
Well, that's right. I mean, it was supposed to be a pro forma moment. It was just a set-piece vote in Parliament for him to be formally confirmed by lawmakers as Chancellor. Then he would go off, start cabinet, and he was due to go to Paris tomorrow to meet with the French leader. So it was all supposed to roll off from there. And of course, he'd already done the work to get these big changes through Parliament in terms of removing the debt brake on Germany, big package around infrastructure and defence. So it was quite shocking to see this result, given that he had the numbers in theory to be voted through as Chancellor by Parliament. The question is, who voted against him, and if so, why? And so we had this second vote just a short time ago. He got over the line. He needed 316. He got a 325. So they got there. And now he will, of course, go off and be Chancellor. But the fact this happened is just a really negative sign for the start of his administration and for the difficulties that will lie ahead, potentially getting stuff done with Parliament.
So so he already didn't have a mandate. So then now is it like an extra non-mandate?
Well, I mean, he does have a coalition with his bloc and the centre-left Social Democrats. So he's got a functioning coalition in Parliament. But it just shows again that there are lots of strands against him, even within that coalition, and that some lawmakers may object to certain policies. It could be quite difficult to negotiate changes to policy, including with the Social Democrats, with whom which they're in coalition. And what was the intention of these lawmakers in voting against him in this minute was to send a signal that, they are going to be hard on some policy platforms with him, that they're not particularly happy that he's Chancellor. It's really hard to know what happened here today, and therefore the signals from it. But it's not a positive start of confidence, really, in his administration, you'd have to say.
Roz, what is the job one here for Mr. Merz and his government now?
Well, obviously, he's worked already to get that debt brake lifted, which is a really important step for Germany to be able to unshackle itself fiscally and to get these infrastructure and defence packages moving. But also, they've got to now work out how to spend the money. There's a lot to spend it on with infrastructure, but there's a lot of red tape also involved and bureaucracy. And so how do you get this money flowing and going where it needs to really structurally kickstart the German economy? Obviously, a lot of external headwinds that, this is Europe's significant economy to grapple with in terms of the Trump administration, tensions on trade, what's happening in the next steps in Russia's war in Ukraine and so on. And Germany needs to be a big voice in all of that. So it's sort of internal questions around the economy. But there's also the far right AfD, which is the biggest opposition group in parliament, could be pushing him along on things like migration. So he's got a bunch of domestic challenges. And then he's got the external environment, which is like trade and Ukraine and much, much more.
All right, Roz, we appreciate it. Thank you so very much. Roz Matheson, Bloomberg News Director for Europe, Middle East, and Africa. Frederick Merz getting the backing of Parliament in a second vote for Germany's next chancellor. This is the latest ballot of lawmakers after a failure in the first vote that came to a shock as everyone, market participants and politicians alike. You're looking at a live shot there of the Bundestag.
Yes, very good. Awesome, you're all over that. I spoke to Matt Miller. He's got some strong opinions there because he lived in Germany for a number of years. So he was trying to impress upon me how big a deal it was that he was not approved on that first vote. And just a question, as you mentioned, what does that mean for the mandate for Mr. Merz as Germany continues to move forward? Let's get back to these markets here. Talk about the fixed income market. One of the folks we'd like to chat with a lot on that is RJ Gallo, Senior Portfolio Manager at Federated Hermes. He's there in Pittsburgh. Hey, RJ, I mean, I'm thinking about you guys in fixed income, and you're always on the different floor. I go to the equity floor, but you guys on the fixed income floor, you had a solid first quarter. I think it's got a little dicey in April. Talk to us about what you're seeing in fixed income space.
Sure. Good morning. Look, the Liberation Day moment was a potential break point in a lot of longer run trends. For decades, the United States has pursued a more open trade policy, and that has translated not only in the flow of goods across borders and services, but goods getting much more attention and much larger. It also included the flow of capital across borders. And when President Trump revealed those very, very high tariff numbers on the board in the Rose Garden, the market was shocked. And I think it led to not just the stock market, but all markets, some fundamental questioning about what is next with respect to the capital flows, because we have a huge trade deficit with the rest of the world, but a big capital account surplus with the rest of the world. I mean, we have a lot of money flowing into the United States from China, from Japan, from a lot of our partners who export a lot more to us than we export to them. And that means they end up owning a lot of fixed income and other assets in the United States. And erecting tariff walls to correct a trade deficit can also cause big changes in the capital account flows. And I think the bond market was struggling with that through much of April. As the dollar fell, stock prices fell, and bond prices fell, the focus became, are we in a sell U.S. moment? Is that capital account surplus being reallocated away from the U.S.? So that was a pretty shocking turn of events. Now, the good news is President Trump and I think Secretary Bessent, who gets a lot of focus from the markets, realized that maybe we need to reconsider and open up the idea of negotiation. Now, they're saying they were going to do that all along. I personally think the stresses in the markets, which were pretty profound, especially in bonds, got them to try to go into a cooling off period, which is where we are now. And the bond market has found its feet again, which is more encouraging.
If the dollar continues its decline, can yields still go higher? At some point, does this correlation go back to normal?
I think they could. I don't think we're at that aha moment where much of the rest of the world that lends plenty of money to the United States, both in the private and the public sectors, in terms of accumulating bonds or treasuries and real estate or whatever. I don't think they're about to turn off the spigot completely. That's not the point. Prices are determined on the margins, right? So if the marginal investor says, I'm not interested in owning a treasury at a 4.30 yield, I want it to be higher. I think I should get more compensation for the fact that it is denominated in a currency that's become more volatile and has been falling, then yes, you could continue to see periods where yields up, dollar down. That's a credit comment. That's sort of regarding the United States as a credit risk. That is not traditionally where the United States has been. The United States capital markets typically have benefited from being deemed the risk-free asset, and people didn't really worry about credit risk in the United States. But when you have a large trade deficit, when you're borrowing from the rest of the world, and you're confronting your trading partners in the manner in which we have done so, that can prompt some reallocation. So on the margins, I think the answer to your question, Alex, is that we could see in moments where that confidence in the U.S. wanes again, depending upon what the Trump administration does next, where the dollar weakens, bond prices weaken, yields higher.
RJ, I think if you ask most investors on the street, they feel like the market's riskier now than it was several months ago. Where do you find the risk reward maybe attractive in your world today?
Now by the market, I think you're referencing fixed income, not the stock market, right?
Yes.
Right. Yeah. So I would think, so Federated Hermes, we manage a lot of different assets. You know, we have a huge operation in what we call the liquidity space, money market funds and very short-term portfolios. The theme that we've touched on in this conversation has been, deeming the United States as a credit risk. Now, we're still a pretty high-quality credit, but if people on the margins are going to view us as a somewhat deteriorating credit over time, then that should steepen out yield curves. That should mean that investors want greater compensation to own a 10 or a 30-year versus a 2-year or a 1-year Treasury instrument. So within our fixed income portfolios, we've been positioning in that manner. We've been looking to diversify more along the curve. We're positioning more for a curve steepener. It's a very common trade in the market. Term premia for taking duration risk should be going higher going forward. And as a result, if one's looking for safety, you've got the liquidity space. The Fed hasn't eased yet. The Fed funds rate is still north of 4%. You have an opportunity to get income beyond the current rate of inflation in cash. That stands out as a really heartening opportunity for some investors. You can inch out the curve into the short and intermediate space without worrying too much about that term premium problem that I just described. So I still think there's a lot of places in fixed income, high quality, shorter duration, liquidity, where if an individual is just concerned about return of capital and a modest, albeit higher than inflation rate of return, there are plenty of opportunities there. If you take a little bit more risk, that's where you can go into multi-sector, for example, and go out the curve. And that's where you do have to worry about the term premium, but you also have a lot of opportunities to take on credit risk. We also believe spreads will be widening. We're still underweight high yield corporates, for example, in our multi-sector funds. And we think that the economy will show fundamental strains from everything we've been experiencing. It will be slowing down and spreads will be widening. There'll be some nice buying opportunities to start adding weights in that over time. But for now, caution is probably the better word.
Yeah, continuing to wait for those spreads to materially widen in any real way. All right, RJ, thanks a lot. RJ Gallo, Senior Portfolio Manager, Fixed Income at Federated Hermes, joining us on the market. Should point out that Treasury Secretary Scott Bessent is speaking to the House right now and saying things like, we're on a warning track for debt limit X date, but will not use gimmicks on the debt ceiling, saying the U.S. will never default, and they're still tallying some tax revenues, etc. So that will be forthcoming. We will keep you updated on any headlines as they cross, as he speaks to the House Appropriations panel. All right, coming up, Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst, will join us on Marriott earnings. This is Bloomberg Intelligence. Happy Tuesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 down right now about 0.5%, on track for a second drop. Palantir Technologies, this is one of the heaviest weights on the market, after falling over 14%. In fact, it's the worst performing stock of the S&P 500. Its sales forecast falling short of the street expectations. And then you have Vertex Pharmaceuticals falling 11%. That company reported adjusted earnings per share for the first quarter. They missed expectations. So the parade of earnings continues. Then there's buying stuff before the tariffs. The U.S. trade deficit widening to a record for the month of March. Imports of consumer goods climbed by the most on record. Meantime, Torsten Slok at Apollo Management says the trade war is about to lead to shortages for consumers.
There's going to be slower sales. There's going to be more increase in prices. And this is happening on the corporate side. Consumers have not quite yet seen this, but it is coming, especially with the significant slowdown in the number of containers coming from China to the U.S. That means that the inventory will, in the next few weeks, in my view, we will begin to see empty shelves.
Empty shelves. S&P 500 right now down 28 points. The Dow down 179 points. The NASDAQ 152 points lower. Ally Financial received a record 3.8 million car loan applications in the first quarter, but it approved fewer borrowers than the prior quarter. Now, according to the Journal, people have been rushing to dealerships to buy cars before the tariff price increases, but getting financing, that is a completely different story.
Oh, yeah.
And cars are expensive these days.
And also, the more people that go to do it before tariffs, and the more expensive the cars are going to get, and it's a slippery slope on that one.
Oh, well. Going to stick with the Subaru a few more years, I
Me
suppose.
too.
We check the market. Do you drive a Subaru?
I do.
Okay.
Forest Green. We call it Jasper.
You named your car.
Well, my kid did.
The things you learn. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right. Thanks so much, JT. Alex Steele here
Yes.
alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. All right, let's get to some earnings here with Marriott. The stock is up 2.5%, despite the fact the company lowered its estimates for revenue growth, projecting a 1.5% to 3.5% increase in revenue per available room in 2025. So the majority of the hotel guys are all lowering those full year guidance. Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst, joins us now. Brian, explain. They lower guidance, but stock is up.
Yeah, I think the big surprise here, Alex, was that the RevPAR guidance reduction was actually more modest than some of the other hotel companies like Hilton and Hyatt. So I think that was a bit of a sigh of relief. They did acknowledge there was some U.S. softness for certain customer segments, but at the same time, they're seeing kind of pretty consistent international demand. So I think it was just the relative magnitude of the reduction that probably was viewed as being somewhat favorable.
So across Marriott and Hilton and Hyatt and all those other companies that you cover, Brian, are they seeing it to the extent they're seeing any softening? Is it from the leisure travel, the business traveler, both?
Yeah, good question. It's really from, I'd say, three primary customer categories: independent leisure travelers, extended stay, kind of the lower tier limited service customers, and then government employees, which are a customer base of some importance for Marriott. And offsetting that is somewhat greater strength in things like group bookings. So there's a bit of divergence across segments.
What about geographically? What's holding up? Because one can make an argument if you're tight on budgets, you're not going to go to Europe, but maybe you'll travel within the United States.
Yeah, so to the extent that Marriott did trim guidance, all of their guidance cut was related to U.S. and particularly those segments I mentioned. Internationally, they have not changed expectations at all. You know, there's been some concern about inbound travel from international markets to the U.S., but within those non-U.S. markets, Asia, Europe, et cetera, they have not changed or in any way trimmed their expectations.
Put on hold, or are they still moving ahead?
I'm sorry, Paul, I missed part of that question.
Just in terms of expansion plans, are the hotel companies still planning on maybe developing new hotels or building new hotels, or are they kind of put their growth plans on hold?
Yeah, so the unit growth expectations in terms of the rooms are unchanged. They're still as they were. They have not really observed, and I'm speaking particularly about Marriott, which reported about an hour ago, they haven't really observed any changes in terms of construction starts. So there's really not been a material change. Obviously, in an uncertain economic environment, it's something that we're watchful of, but to the extent that we're looking at that, there's been no change in terms of their room expansion pipeline or development plan.
Well, what competitors do you feel like are okay? Let me ask a different way. If we wind up getting more calm and more indecision is thrown by the wayside, right, and we get clarity, which hotel lodging is best set up for that?
Right, so that's a good question. I think to the extent that we're talking about the big wild card being independent leisure travel, it extends fairly broadly across the companies. To the extent that we look at the degree of, let's say, cuts, Wyndham probably cut the most, and they're deeply in the extended stay segment. Maybe you would see a little bit more bounce back there to the degree that they have reduced expectations more. But I think across the board, they all have some degree of exposure to the segments that have been a little weaker, which is independent leisure travel, certain types of extended stay customer segments, particularly for Wyndham, and things like government employees, which I mentioned for Marriott.
We've seen a lot of soft data suggesting that inbound international travel is down. And this is just short-term data, maybe not any long-term trends. What are your companies saying about that?
Yeah, that's been a concern of ours for a while, that you would see a reduction, particularly from inbound travel from Canada and Europe. And I think to some extent, we've seen that. Marriott did say that their Canadian bookings for U.S. stay room nights were down about 5% year over year. However, they did observe that that was offset by stronger inbound travel from other markets. And also, I know yesterday, or a few days ago rather, Hilton mentioned that Canada represented only about 1.5% of their total company revenues in terms of Canadian customer stays at U.S. hotels, right? So the exposure to some of those inbound markets is relatively small, but there does seem to be some puts and takes where they're getting some relief from other markets, even though across the board, Canada inbound tourism to the U.S. is down. It's just not a particularly material percentage of the overall customer base.
So that's sort of the lodging side. What about the gaming side? What have we noticed in terms of an earnings or forecast or just any sort of read through there?
Not really much of a change in terms of markets like Las Vegas, which is really principally a domestic audience. Really not any material change in terms of expectations there, although those companies' guidance metrics are a little bit less specific in the case of the Las Vegas companies. We were watchful of the sector because at least one company, Churchill Downs, delayed a capital spending plan at the Churchill Downs racetrack, which just had the Kentucky Derby last weekend. And they were planning on a fairly large expansion project there, which they've delayed amid economic and trade uncertainty. But that does not seem to have extended to other companies. So no major changes in terms of capital spending plans or bookings trends for some of the major gaming operators.
So by and large here, what are the stocks telling you, Brian, here across the lodging space? Have they been selling off or underperforming the market? What are they telling us?
There were some of that. I mean, it's interesting to see, Marriott maybe up a little bit today. I think there's been certainly some expectation of an economic impact from both the trade and economic uncertainties. And we did see, for some of the recent sell-offs of the market, lodging companies were certainly hit. And so by the time we got to the companies like Hyatt and Hilton actually reducing guidance, the follow-on stock price behavior was not particularly pronounced, because I think there's been some anticipation that we'll see a little bit of a slowdown amid the uncertain economic environment.
All right, Brian, thank you so much for joining us. Brian Egger, he covers all the lodging companies, the gaming companies, all the fun companies. And we had Marriott, again, bring down their guidance a little bit, but as Brian suggested, maybe a little bit less than expected relative to the peers. So the stock's actually at Marriott trading up a little bit here. So you would think that those consumer-facing companies like the casinos, the hotels, they would be a pretty good gauge as to what's going on out there.
For certain individuals. Did you have your Vegas trip? You did. You did have your Sphere Vegas trip, right?
No, I didn't. I ended up not going to that because we had a last-minute little hiccup in the morning.
You had a snafu. Oh,
yes.
My goodness.
Yeah, that was a bummer. So I missed
no.
seeing the Eagles at Sphere, so I have to put that back on the schedule at some point.
Oh, man. All right, Sam Fazeli joins us next. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio, bringing you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We get a lot of biotech earnings. We get a lot of GLP-1 drug company earnings like Novo Nordisk tomorrow morning. Want to check in with Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. But he's also such an amazing voice in the biotech sphere and sort of what's upcoming, what are the new cool things we need to be paying attention to, Sam? So really the floor is yours. Like, what's most on your mind right now?
Yeah, so Alex, thanks for having me on again. We had BioNTech's results yesterday. If you remember, BioNTech is the originator of the Pfizer COVID shot. So they're one of the two mRNA shots out there. And what was, again, good to see is that despite all the uncertainties that we're hearing about with regards to attitudes to mRNA vaccines, etc., neither of the companies have reduced their guidance for the year, but the guidance have got really, really wide margins in terms of where they're going. And they both need it because they're both spending a large amount of money on R&D, which is what companies should be doing to discover new drugs. And a lot of those drugs are, at least in the BioNTech case, in lung cancers, in cancer in general. And we have some interesting mechanisms that are going to read out. So that it's going to be interesting to see how this all pans out over the next few months with regards to vaccine attitudes, etc. So
hey, Sam,
fingers crossed that people would take those shots.
Yeah, historically, Sam, have healthcare stocks broadly defined? I'm thinking of the big cap pharma companies. Are there places to hide out in times of uncertainty?
Yeah, absolutely. They are probably the most defensive of the defensives, along with utilities, etc. But the problem I think pharma has got right now is that, as we just saw, President Trump apparently has said that he might come back again in the next 2 weeks with some tariffs for pharmaceutical companies. Most of them have said that they're ready to manage it and be able to absorb it. Some have already given us some numbers, as we spoke about last time, with regards to how they've been hit in the first quarter. But that is the one thing that maybe takes a little bit of the shine off from that defensive feel.
How do they mitigate it? Like, I mean, you make it sound like it's no big deal, they can manage it, but how does a company mitigate issues like that?
Right. So a whole bunch of them, I think, have shipped a ton of drug to the U.S. already.
So they're just stockpiling, right? Like that's their solution?
Stockpiling, they can't just switch manufacturing overnight. So that can't happen. So they're just putting a whole bunch of drug in the U.S. and also hoping that the tariffs don't come. And if they come, there are the numbers that they can manage. And let's not forget, these are companies that have got pretty good margins. So maybe they'll manage the margin impact within their capabilities of the guidance that they give. But frankly, I think that, as they keep saying, the better way to try and get these companies to move manufacturing to the U.S. is to just give them some time and say, look, you've got, instead of a 90-day thing, you've got a year, 2 years to show that you genuinely are opening and moving manufacturing here. If not, then I'll hit you.
All right, I'm going to preface this question with a statement here, Sam. I've been following the healthcare industry for, 40 years. I have zero knowledge of the economics of the healthcare industry. I don't know who sets what price, where, who gets paid. I have no idea. I just write a check every once in a while. If, in fact, they wanted to push through price increases, can they do it with all the insurance and the governments and all that kind of stuff?
They do. They do. Every year in January, pretty much every pharma company, and I can't say 100% of drugs, take a price rise. On the list price, let's not forget. And then some of them do another one in mid-year. So, but of course, the majority of that price rise, they give back in discounts to the middlemen, as they call them. So the pharmacy benefit managers and the insurers in the middle. So discounts and rebates. And so the end price that gets to the consumer is never really up by that much, as much as what you can see on the list price. So that's how that works. And some of the companies are in a very competitive position. So as we've seen with these GLP-1 drugs, some of them are beginning to discount a little bit. So Novo Nordisk being, as we're going to talk, I'm sure, tomorrow they're reporting, they just announced last week that they've done this deal with Hims, they've done this deal with CVS, and the CVS deal is at a lower price. It's the cheapest that you can get for this listed type of drug, the Wegovy.
It also raises the question for me, like, how sticky are customers when it comes to drugs? And like in general, it's like, is it the cheapest one? Is it once you start a regimen, you don't want to ever change it? Is that like, how high is that barrier to entry? I mean, we've seen that be a little confusing when it comes to the GLP-1s.
Yeah. So Alex, some of that isn't up to the consumer. So a lot of that is up to the insurance companies. So if your group insurance suddenly decides to switch provider and say, okay, from now on, we're going to push you to take Wegovy versus Zepbound, you're either going to have to go back in the market and buy it out of pocket, or you accept that switch. So that switch does happen. It is harder in diseases where you're actually maintaining a response, or like even in those diabetes, for instance, you're under control very well. Why switch? Mm-hmm. Well, obesity, I don't think is going to work like that. And I think you can see probably more price competition, but also I think the best drug will get the one with the lowest side effects and the best weight loss will get and as you can see, Zepbound's doing a lot better than Wegovy on our prescription data that we have on the terminal.
Oh, nice.
They have the best prescription
really
data.
cool.
It's Grace Gow. She's in Princeton. She is basically the beast. She takes care of all that stuff.
Oh, amazing.
She's awesome.
I love her. All right, Sam, thanks a lot. We appreciate it. Sam Fazeli, Bloomberg Intelligence Director of Research, also Senior Pharmaceutical Analyst. For our listeners, everyone, here is a reminder. You can listen to us via satellite radio on SiriusXM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM, channel 121 is presented by ShipStation. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now, with markets a little bit lower, but volume still light versus the 10-day average. S&P down 0.4%.
is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everyone. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We have a great lineup for you. Bess Friedman will be joining us from Brown Harris Stevens on the state of commercial real estate as we sort of take in what the volatility and the rate volatility has done to that space. Plus, we have a great interview with Ares CEO Michael Arrighetti speaking with Bloomberg's Sonali Basak at the Milken Institute in Beverly Hills. And then we'll be following President Trump welcoming Canada's Prime Minister Mark Carney to the White House. Then they'll be followed by a bilateral meeting. So we'll kind of dig into that and what it winds up meaning between trade between the two countries. But let's kick it all off for you right now with the Bloomberg Business Flash with John Tucker.
All right, thanks to Alex and Paul. Stocks right now, they are lower, but pairing some of the earlier losses. Treasury Secretary Scott Bessent signaled negotiations with several commercial partners are growing well. So we'll tribute to that. It's worth noting the two-year Treasury yield, that is lower right now, down almost 4 basis points at 3.79. We're seeing a record U.S. trade deficit and a slew of downbeat corporate outlook statements. So it all may reflect worries of the economy at this point. Cameron Dawson at New Edge Wealth sees more bad news on the horizon for investors.
We do not think the worst is behind us when it comes to real economic data weakening, the fundamentals showing the signs of the weight of these tariffs on them, which just means that, yes, we're getting this relief rally, but we haven't even begun to see the fundamental impact.
Right now, the S&P 500, 20 points lower. That's down about 0.4%, 56.29 on the index. The Dow Jones Industrial Average down 136 points. And the NASDAQ 100 right now down 128 points. Advanced Micro Devices set to report results after the close, and this actually could give investors insight in how demand for artificial intelligence infrastructure is holding up just a few weeks ahead of NVIDIA's results. Medicaid ensures 72 million low-income and disabled people. And now House Republicans, this according to New York Congresswoman Nicole Malliotakis, they're considering establishing work requirements for Medicaid recipients up to the age of 64. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, JT, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio in New York City. We are streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcasts Live. As John is reporting, we've got a little bit of a sell-off in the market here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele, and we're joined by Bloomberg's Norma Linda. Norma, what do you have?
Well, let's take a look at one of the biggest decliners in the S&P 500 right now. I've got eyes on Palantir Technologies. Now, we're seeing shares of the company that are lower, down as much as 15% in trading today. That's the most in over a year, and this comes after very high expectations from Wall Street about the metrics that were coming out of this company. Of course, we know the AI boom has really been in focus. I mean, the company is even saying that there was a ravenous whirlwind in terms of rising demand for AI software, but it just didn't really meet expectations, the high end of expectations that being. I mean, if we look at the stock, it was the best performing stock in the S&P 500 up until yesterday.
Yep.
And so we're just seeing the stock kind of taking it to the chin a little bit today.
I mean, I gotta say, though, the numbers were still amazing, and the growth rate is still really good. This just feels like you ran real far, real fast. Let's take a break.
Right. I mean, outlook was even raised. So
yeah, I mean, exactly.
That's what the kids call a beat and raise.
A beat and raise.
Yep.
A beat and raise, and still yet the stock goes down.
Exactly.
What else are you looking at?
I'm looking at Vertex Pharmaceuticals. That's another big declining stock in the S&P 500 right now. So it reported earnings, and it says 20,000 prescriptions were filled for its non-opioid pain drug, but this wasn't enough to satisfy the street. I mean, its first quarter results missed expectations, and analysts are actually mixed about the launch of this non-opioid pain medication, especially as it's really trying to gain a lot of backing from insurance companies. So that's really been weighing on the stock. It's tumbling for its worst day since December. Shares are down as much as 14%, but up about 8% so far this year.
All right, interesting. Anything else out there?
Lastly, I want to take a look at DoorDash. I mean, you guys know.
Yeah.
I've been a Grubhub user, but DoorDash is kind of calling my name as of late.
Really?
Why? How can you tell the difference?
I mean, they're giving me, so I have a Chase Sapphire preferred card.
Of course you do.
Just got that. Love
Right.
it.
Love it.
And you get access to DoorDash. They give you some sort of discount, and so they've been seeing me a little bit. But I'm cooking more, guys. But all that to be
so
said,
many things we learned. This is so exciting.
What are you cooking?
I actually, I don't want to get too far in the weeds of
But she's
what
gonna.
I'm making, but I mean, I got some chicken breast. I made cream spinach last night. I'm really out here getting the groceries and going to work. You all should be proud.
We are. We are so proud. For more conversations just like this and more recipes, go ahead and listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere where you get your podcast. All right, let's keep going with the DoorDash theme here, agreeing to buy Deliveroo in about less than a $4 billion deal, $3.9 billion U.S. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, joins us now. What do you make of the price tag?
Well, I mean, it's not one of the expensive acquisitions that we have seen with these online delivery companies. The multiple is quite low. It's about 1.2 times EV to sales. So look, when it comes to delivery companies, we know they have had their challenges with profitability. And that's why, delivery, even though it IPO'd a few years back at a much higher valuation, the selling price is a lot lower because of all the execution challenges they had. And in this case, I think DoorDash has a proven track record when it comes to showing better profitability than their peers. So, it's an easy way for them to expand in the UK market, given most of their business is here in the US. And so it does make sense. I mean, the key question is, can they implement their playbook and make the Deliveroo unit profitable in 1 to 2 years?
And Alex, I know you're dying to know this information. JP Morgan advised DoorDash, and Allen & Company and Goldman Sachs advised Deliveroo. So again, bankers getting paid. So that's what we like to see.
I believe in that.
Exactly. Talk to us, Mandeep, about, so I'm avowed, I do not support this home delivery of food thing, and my kids know that, and I won't pay for it. And they get put in the penalty box if I ever see a charge on the credit card. Talk to us about the economics of delivering food here in the U.S. versus delivery use wherever they are in the UK.
Yeah, I mean, look, the three-side marketplace businesses are not the easiest to run in terms of unit economics, and that's why DoorDash has emerged as the category leader, because not only have they executed better in terms of batching efficiencies and really making sure they optimize the time of the person who is delivering the order, but also they've been able to layer on ads. They've been able to layer on some technology solutions where they would do the app or the website of the merchant that they are delivering food from. So they will charge them a fee for that. And all these small things have added to their profitability in contrast to even an Uber Eats, which is not as profitable as a DoorDash is. So that just goes to show that scale is important in this business, but also operational execution. And that's what I think the DoorDash team has delivered since their IPO.
I guess the question for me is, how much runway do these companies have? Like, how can they grow their total addressable market when, in theory, like, you're not going to use this in the middle of a suburb? Maybe you do in the suburb, but not in like a rural area.
I mean, just look at how much they have grown since the pandemic, which is when they got the big bump. And since then, they've been like DoorDash has been compounding top line at a 20% CAGR. And the reason they've been able to do that is they're pretty much doing all last mile delivery. I think Amazon Prime, they're doing that on the delivery side now with grocery delivery, convenience delivery. And that is what gives you the batching efficiency in terms of saying, hey, not only are you helping me deliver food from the restaurant, but also pick up this thing from the convenience store and also this grocery. So all these, when you look at the scale in terms of number of orders and GMV, I mean, DoorDash may do almost $100 billion in GMV this year. So it just goes to show that, there is a market in terms of online conversion of a lot of the things that used to be done in store. And once you digitize the data, you are able to layer on ads, and people will pay for convenience provided the costs are not that high, which is why the delivery side is still a low margin business, but it's all these ancillary services that makes the company profitable, and it comes with scale. So, which is what DoorDash has been able to achieve.
Yep, absolutely. All right, Mandeep, thank you so much. Sweeney, Offspring are still not allowed to use any of these food delivery services.
But they do. They still do.
Once in a while, one will sneak by, and then I shut off the credit card for
I've seen it happen.
Nothing makes me more angry than seeing a delivery at the front door.
Yeah.
I just go mental.
Exactly. It is convenient, but it's so expensive. It just the value's not there for me. All right, Mandeep Singh, he does that stuff for a living for Bloomberg Intelligence. Let's talk new energy finance. I don't know how the whole new energy world is going to play out with President Trump here. It just feels like, boy, that's a headwind. But we're going to break it down. So we've got, who do we have here? We've got Paul Lascano, Bloomberg BNF Senior Associate. So, Paul, how do you guys think about wind, solar? I mean, just all these new greener energies. Just frame out for us kind of, is this administration a headwind to that? And if so, by what degree?
Yeah, and thanks for having me back. Certainly, every industry, we have to look at every industry separately, and in conjunction, we have to align to understand what are the common threats, and then what are the individual characteristics of each of those industries. So, so far, we've seen, obviously, offshore wind has been badly hit, mostly because offshore wind is heavily relying on federal agencies and federal authority, whereas solar has been pretty much unstoppable. There's very little things that Trump and the administration can do to really slow down growth. And then battery storage, which is this nation technology that's coming to support both solar and wind generation, has also been, I would say, somewhere in the middle, not as badly hit as offshore wind, but tariffs have had a much bigger impact because the U.S. still imports a lot of the batteries from China, because the battery supply chain is not as diversified as the solar or the wind supply chain.
So you guys have a note out that talks about how U.S. clean power build will quadruple by 2035, despite all of these risks. That's a big number. So you mentioned that solar is unstoppable, battery and energy storage potentially also. Can you walk us through your outlook for solar in particular?
Yeah, the reality is the U.S. and pretty much everywhere in the world will need power. What's the fastest, cheapest new source of power generation? It's solar, like hands down. It's easier, quicker to build. If you can get the permits and the grid connection on time, which are really the only bottlenecks to getting new solar built, then it's very hard to stop. And we've seen that all over the world, especially now the U.S. Gas, nuclear. There's talks about a renaissance for both of these technologies. But the reality is that there's physical limitations to building gas and to building nuclear that probably most of the audience is very familiar with. With solar, you don't need pipelines. You don't need to build new pipelines. You don't need to approve new pipelines. You just grab panels, you install them, you connect them to the grid, and that's it. And then you have a new source of generation. And the reality is that despite the efforts from the administration to revitalize fossil fuels and nuclear, the easiest thing to build is solar, and it's going to continue to be like that for a long time.
Well, talk to us about the tariffs here. Like, if there's a 140% tariff on a battery coming in from China, doesn't that make a lot of projects just unfeasible economically?
Yeah, that's a great question. And there's certainly some battery projects, big battery projects, in parts of the U.S. that are going to be delayed. There's going to be probably delayed by 12 to 18 months as everyone figures out what the final tariff on China will be. But the reality is, if we look at what happened to the solar sector and the global solar supply chain back in the day when Obama started introducing high tariffs on solar panels, supply chains reroute very quickly. So we do expect eventually within the next couple of years, if tariffs in China continue to be pretty high and the risk of using Chinese batteries remains pretty high, irrespective of what the tariff level is, we do expect some new capacity coming online in South Korea and Southeast Asia, as well as in the U.S.
What about battery storage and energy storage?
So battery storage is, as I said, it's more hit by tariffs than solar because of its reliance on China. So we assuming a slowdown in new additions because right now the ramp up has been really quickly. But the role of battery storage for power markets has been very, very critical over the past couple of years. It has probably arguably saved Texas from blackouts in the past 12 to 18 months because the ability of batteries to ramp up quickly and meet peak demand, it's fascinating and it's really quick to dispatch. And we think it's going to play a bigger role in markets outside of Texas too in the U.S.
How hard is it to get connected to the grid? If I build a wind farm in the middle of West Texas, like I saw on Landman, they're off the grid. How do you get stuff to the grid?
It's very difficult. Some of the difficulties are obvious when there's a very long distance between where you're building the farm and where you want to deliver the power. So you need to get transmission built, which means you need to get everyone along the way who owns the land where those transmission lines are going to be to approve, to like allow you to build it, which, as I'm sure you can imagine, is a very tedious process. You need different regulatory approvals. And then to get connected to the grid, you have to undergo years and years of different system studies where they have to assess what's going to happen if your wind farm now connects to the grid. What's going to happen to all the power flows going in all directions? Imagine just doing that study for one farm, and they do this for pretty much everyone who's applying for the grid at the same time or at the same grid connection point. So the engineering is really complicated, and it's been by far the biggest bottleneck of getting any new source of power generation. And yeah.
Is it easier to do that or build a pipeline? 30 seconds.
Easier to do that than build a pipeline, I would say, except if you're in Texas or Louisiana.
Okay, well, no, that's a fair point. Also, I'm obsessed with the transformers, like the thing you need to plug into the grid, like just that one piece of equipment. The backlog is huge.
Remember, the frequencies have to match as well, because otherwise you will have big problems.
Hence all the years of study. And then also the questions of how much alternative or intermittent energy you want on a grid. Just ask Spain and their blackout from a couple weeks ago. All right, it was really great to see you. Thank you very much. Paul Escano, he joins us from Bloomberg BNEF. They do all the great research on energy across the board, whether clean energy or otherwise. And they do technology and they do financing. It's really quite interesting. You should definitely check out their research. All right, coming up, Bess Friedman is Chief Executive Officer at Brown Harris Stevens. We'll get that take on the commercial real estate market, and plus our interview with CEO of Ares, Michael Arrighetti. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. It is Bloomberg Business Flash. Stocks moving away from the session lows. This comes after the Treasury Secretary, Scott Bessent, signaled that some of the tariff negotiations are going well. Palantir Technology sinking its financial results and projections failed to live up to investors' lofty expectations. In fact, this is the worst performing stock in the S&P 500 right now. Archer Daniels Midland's earnings shrunk to the lowest level since the pandemic. A difficult crop trading market complicated by mounting trade and biofuel policy uncertainty. The S&P 500 20 points lower, 5630 on the index. The down 158 points. NASDAQ 100 right now down 128 points. And looking at the two-year yield ahead of the Fed decision tomorrow, the two-year is down close to 4 basis points right now at 379. The 10-year is up a basis point at 435. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Live Podcast. That's where you'll find us as John was just reporting a sell-off in the market. One of the topics that Alex and I like to revisit on occasion is the commercial real estate business. We'll talk about a business that was really impacted by the pandemic, particularly in some of the larger markets like New York City. So that's why we like chatting with our next guest, Bess Friedman. She's the Chief Executive Officer at Brown Harris Stevens. She's joining us from New York City via the Zoom thing. Bess, thanks so much for joining us here. Here on Lexington Avenue, 58th Street, we've still got a lot of vacant retail. Talk to us about that part of the market here.
Yeah, I mean, I think you're seeing two different narratives. You're seeing openings, but you're also seeing a lot of closings, and we're just not out of the woods yet. We started to see the early stages of what I would describe as a moderate recovery, but there's still some great challenges, specifically in places like New York City. In San Francisco, I know, has similar challenges, and we need to address issues like homelessness, crime, all of those sorts of things need to be addressed, and safety, and it's impacting our city overall. And so we're getting there. We've made progress. Last year was better than 2023 for sure, wasn't as good as 2022, and some sectors are performing better than others. Multifamily performed really well and is continuing to do so. And nationwide vacancy rates are at something like 17%. Oh, in New York City, it's 17. I think nationwide it's 14. And so for the Q1 2025. So look, it's a mixed bag. There's some good and there's bad.
What is the most misunderstood piece of the commercial real estate market right now?
I think that, you're hearing, there was a lot of doom and gloom that people were talking about, in early on after COVID. And I think you've seen a decent recovery and the demand is there. And there is demand for office space, just FYI. I think that's misunderstood. There are people that do want to be in the offices. People are requiring it in New York City. And I think that's a good thing. But the demand is for quality. And I think, the B and C office spaces, we're gonna have to do something with those. But I do think people have returned to the office, want to be here, even if it's partial and there's hybrid working. I think that, that is misunderstood. There's not this sort of work from home across the country.
Hey, Bess, talk to us about just kind of the lending markets here. Let's say I wanted to develop a property or buy a building. Is my local bank going to be there for me?
Depends. I mean, it all depends on what building, who you are. It's all of those issues. All of those things are important. And there are some loans becoming due at the end of this year and next year. I think next year, 2026, some loans are maturing in the commercial realm. It's something like $1.8 trillion. So that's what people are concerned about. But yes, there is money out there and people will lend. It's tighter than it has been. Credit has been really hard. But at the end of the day, if you have are somebody that has done projects and people will lend to you and it's the right project and it makes sense and you can prove it, yes, but it's not what it was. You know, I think the economic uncertainty, the higher rates, inflation, even tariffs, all of that stuff, you know, has people rethinking things and being a little bit more cautious.
I think everyone was kind of waiting for the big fallout to happen, and it never really did.
That's right.
Does that eventually happen, or is it going to be on sort of a property-to-property rolling basis over the long term?
Yeah, I don't know if there's going to, I mean, predictions are impossible. None of us know really, because every day is a different news story and what's going on in the economy. So I don't know if there's going to be some sort of huge fallout. If it's going to get rougher, it could, but I do think it depends. It's almost like if you look at retail, which is a mixed bag, you see, you know, Walmart's opening up and Trader Joe's opening up, but then you see Walgreens closing. And so, you know, and so it just depends on what it is, you know, it depends on what is happening and what the business is and where it is and all of those things.
Bess, talk to us about South Florida. Is it still strong or is it rolled over?
You know, South Florida is doing well. It's decent. It's steady. There's demand, and you know, I think there was an article today in the Journal about Florida, and the demand for real estate there is decent. People want to be in Florida, and there has been this sort of migration of businesses moving to Florida. And so I think that has remained the same. I don't see that changing anytime soon. So we'll have to see.
All right, Bess, thank you so much for joining us. Always appreciate getting your perspective. Bess Friedman, she is the Chief Executive Officer of Brown Harris Stevens, giving us an update on kind of global real estate. Again, a little bit of uncertainty out there in just the overall economy, even finding its way into the real estate business. Maybe not going to, you know, hold off on a certain project or hold off on upgrading or something along.
I feel like this reminds me of the default cycle we were supposed to see in 2016. Like that huge fallout that was supposed to happen that all the private guys were all excited about. That huge wave didn't happen. It didn't mean there weren't opportunities, but that wave didn't happen. It feels like something similar is also evolving in the commercial real estate space as well.
Yep, and we were told by a lot of bank analysts that you'd see it probably more in the small and mid-sized banks who maybe had some more local commercial real estate and residential real estate, as opposed to the large banks, which really real estate is a small part of their loan portfolio. But right now, let's head out to Los Angeles to the Milken Conference. Ares CEO Michael Aronetti speaks with Bloomberg's anchor Shonali Basak to get the lay of the land in private equity, private credit, and the deal market. Let's head out to the Milken Conference in Los Angeles.
Welcome back. We are here at the Milken Global Conference, joined now by Ares Management CEO Michael Arougheti. Thank you for joining us here on set.
Good to see you again.
A lot of conversation going on. We have to start with tariffs. I mean, it's kind of taking up all the air in the room these days. What do you make of the strategy that you're seeing from the administration and how you as an investor react to it?
Yeah, look, we try to stay above the politics and just think about where the markets are going and how it affects capital flows in our business. I think the good news generally from an Ares perspective is the businesses that we invest in tend to be middle market service companies that have their customer base in local currency, local markets. So we don't really invest in a lot of companies that make things or have to grapple with supply chain issues or tariffs. So I think in terms of the first order impacts, we're pretty unaffected. Obviously, the longer that these trade imbalances go on and the trade war goes on, it affects everybody just in terms of the economic impact, and that's what we're keeping an eye out for. But so far, we're just kind of in a wait-and-see mode, and hopefully we'll get some information in the next week or two that'll give some people some clarity.
A lot of wait-and-see going around. What about the difference that you see between smaller and middle-sized companies and the larger ones? There's a lot of concerns that there will be a disproportionate impact to the changes in policy for those middle-sized companies.
Yeah, I'm not sure I agree with that. The reality is most middle market companies are more insulated from some of the large cross-border impacts of the tariffs, and I could craft an argument that they're actually more protected in some respects from some of the issues that we're grappling with. That being said, if we start to head into a recessionary environment, they'll bear the brunt of it. So again, it could break either way, and we're just going to have to react to what the market gives us.
What do you make of the relationship that is changing between the two world economic superpowers, the U.S. and China? Of course, a lot of investors have looked more and more to China, to Asia more largely, but of course, the tariff escalation has not been helpful to that movement. Do you think that there's some reversal there that will happen in the future?
Look, we invest money on behalf of institutions and individual investors all over the globe. We have a large business in the Asia-Pacific region. You know, part of our business is benefiting in terms of people allocating to other regions of the world where we have capability and capacity. Our industrial logistics business is actually benefiting from some of the changes we're seeing around the global supply chain, nearshoring and reshoring and China plus one. So there's always going to be puts and takes. The reality is very few investors, U.S. dollar investors, have been investing into the China market over the last many years. So we're not really seeing that significant amount of disruption.
You know, it's interesting. At a time where a lot of people are looking around and seeing capital kind of frozen, you've actually raised a significant amount in places like private credit. What do you think you're doing differently here? And what does it mean for your ability to bring in more interest from investors for the rest of the year?
Yeah, we were fortunate. Last year we had a record year of fundraising. We pulled in about $93 billion of new AUM. This first quarter, we just had earnings yesterday. We added another $20 billion to the dry powder pile. We have about $145 billion to invest. I think what we're doing differently from a positioning standpoint is, number one, we have a broad, diversified global business. So I just think that we're giving investors a lot of choice as to where they want to play and what risks they want to take. As probably one of the pioneers or leaders in private credit, we're one of the few managers that actually has a track record that goes, you know, back 20, 30 years, where people can see how we've performed through cycles. And then, as we often talk with investors, if you look at our private credit strategies today, broadly across real assets and corporate, we're generating 12 to 15% rates of return right now. So on a relative value basis, I think with this amount of uncertainty on the forward path of earnings, valuations, I think most investors are just finding it, frankly, easier, you know, to take shelter in the credit markets and make those kind of low to mid-teens returns without having to worry about that equity risk premium.
Right, what's fueling that return? Is it because rates have remained higher, ultimately?
Yeah, it's clearly a reflection of the base rate environment. Rates are now starting to drift down, as everybody knows, but as they are and concerns about economic weakness are seeping in, credit spreads are starting to widen out. So while rates are coming down, I think people felt the asset class was going to be much more rate sensitive than it actually is, because we're making up for that reduction with credit spreads widening.
As I talk to you and your peers, I can't help but think that there might be actually around the corner in the wake of some of this turmoil, a golden opportunity that's forming to deploy larger and larger dollars, given how much valuations have corrected.
Yep.
What does that opportunity look like?
Yeah, look, I think we now, having been in business for 30 years, have seen that we actually have grown faster through periods of dislocation. So the fastest growth we ever had was through the GFC in terms of our profitability and our AUM. Second was through the COVID pandemic. And that's a combination of just the unique structures that we manage, the capabilities that we have. So typically, whenever we have volatile markets or dislocation, it creates opportunity. What's unique about this moment is the amount of investments that have already been made in the private markets at high valuations that were reflecting the lower rate environment is of a magnitude that we haven't seen before. And so the resolution, if you will, of all of those assets that need to reset basis, we think is going to be a massive opportunity in places like secondaries, opportunistic credit, opportunistic real estate. So, you know, around the halls of Ares, we're actually quite excited about the future.
So secondaries is a good place to dive in for a moment here, because you are seeing a lot of limited partners looking to sell. Some of that is their own liquidity concerns that we're hearing about, but also Mike, the private equity industry has been holding on to assets for years. The IPO window has not opened in a meaningful way. This was supposed to be the big year. It didn't happen, not really yet. Yep. M&A also pretty stalled. What does that mean for the private equity industry? Can they keep borrowing to keep the party going?
Yeah, I think they can. I mean, the financial incentives in private equity are aligned to long-term equity value creation, and that may require holding these assets for longer. There's a real tension in the market now from limited partners who want to see a return of capital before reinvesting. But the opportunities for liquidity have gotten much more innovative and creative and complex. So if you're a private equity GP, today the entire market, there's about $3+ trillion of private equity invested. 60% of that private equity is 4.5 years older or more. There's about $1 trillion of equity that has not been invested. And so the challenge that the private equity industry is facing is, do I take my $1 trillion and invest it into this new market where there's probably good opportunity, or do I use it to support valuation and growth in the existing portfolio? But you can't do both, and that's where secondaries comes in. So we're seeing significant demand from the GP community as well as the LP community to kind of figure out how to recapture some of that $3 trillion and get it back to investors.
If you had to describe that tension between investors and their private asset firms, what is it?
I'm not sure there's a tension. I actually think that most sophisticated LPs, which is largely all of them, understand the world that we live in, and I don't think that they want to see assets getting monetized at valuations that don't reflect the intrinsic value. That being said, they want to participate in this new vintage. And so if there's a tension, it's really, how do I capture this wonderful opportunity set that you just referred to without compromising value creation in the existing portfolio? And not just a dialogue, you know, and GPs and LPs are all going to be in a, you know, different place depending on their liquidity or the age of their portfolio or frankly the performance of the underlying portfolio.
It's certainly the topic of the day, and Ares is right in the middle of it. Mike, we have to leave it there. We thank you so much for joining us here on set. That is Mike Arrighetti, of course, the CEO of Ares here at the Milken Global Institute.
All right, that was Shanali Basak speaking to Michael Arrighetti, Ares CEO. Much more coming up from Milken throughout the next couple days. Amazing interviews coming from our team there. Let's get you caught up right now with a Bloomberg Business Flash with the amazing John Tucker.
Thank you very much, Alex. Right now, the major averages, they are lower. You have 8 of the 11 major industry groups in the S&P 500 down. Healthcare, the biggest drag. Yeah, that's home to Vertex. Their first quarter earnings missing expectations. Stocks are off the lows of the session, though, after the Treasury Secretary, Scott Bessent, said a lot of countries have good offers in the trade war. Again, he said some deals may be announced as soon as this week. Meantime, Jeffrey Rosenberg at BlackRock says investors are still grappling with uncertainty.
We're, having a nice little rebound from the April, Liberation Day surprises, and we're not out of the woods in terms of the uncertainty here, and it's tough to measure.
Palantir Technology shares sliding by the most in nearly a year. Its financial results and projections, they failed to live up to investors' lofty expectations. In fact, that is the worst performing stock in the S&P 500. S&P 500 right now down 16 points, down 0.3%. The Dow 140 points lower. The Nasdaq 100 down 116 points. That's down about 0.6%. And finally, some trucking news. Aurora Innovation, never heard of them, but they have successfully completed a fully independent freight delivery along a public highway with an autonomous 18-wheeler, marking a milestone in autonomous trucking.
They say that's going to be a thing, really.
That is the subject of a Bloomberg editorial today. Okay. And it's really fascinating. I don't know. Would I want to be driving in the truck lanes of the New Jersey Turnpike, knowing most of those trucks are autonomous?
Well, first of all, it's not like there's going to be like 47 of these trucks like next to you. Like they're going to roll out up to maybe like 10, right? I mean, it's still a very small, selective amount, and you know that the security around that's going to be huge.
But all the transportation people tell me that's really where you're going to see EVs have not EVs, autonomous vehicles really have a big impact. I said, okay all right.
Yeah. I mean, imagine the kind of overhead that you could get rid of. Also, trucking is a really hard job. So imagine.
And where do
being able
those
to undo that.
truckers go to get jobs? So
The
that's
manufacturing facilities that we're building in the
Since
in
the beginning of
country.
time, there's been 100% turnover in truck drivers.
Now, do the
It's such
truck
a hard-
drivers go to a little remote thing like flying
little
a,
joystick.
and
I don't know.
drive
It
the
does
truck
not do
that
that.
way?
No.
Okay, all right, just asking.
I mean,
Anyway,
that would be something. Go ahead.
we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash as I head off to the New Jersey Turnpike.
Good luck with that. All right, this is Bloomberg Intelligence. I'm Alex Steele alongside Paul Sweeney and John Tucker. We bring you all the news in business, economics, and finance, and politics. And the latest is that President Trump will be meeting with Canadian Prime Minister Mark Carney in, I don't know, sometime this morning. It should be relatively soon. And then they'll have a bilateral meeting as well. What will come out of that from the U.S. side and the Canadian side? So let's go to Tyler Kendall, Bloomberg Television Washington correspondent. She joins us now. What are we expecting? What's the TikTok here?
Yeah, hey, Alex. Well, we're expecting the Prime Minister of Canada to arrive here at any moment. You can probably see over my shoulder. And for our radio listeners, there is an honor guard waiting, flanking the White House North Lawn driveway, holding the flags of all 50 states to welcome the Prime Minister here once he ultimately arrives and then is greeted by President Trump ahead of what's expected to be a pretty high-stakes meeting, considering that at least publicly we really haven't gotten much progress when it comes to trade talks with Canada. And Mark Carney sort of downplayed the stakes ahead of today's meeting, if you will. He said that he understands that these talks are going to be difficult, but he hopes constructive. I don't need to tell you, but it's good to reiterate that, of course, the U.S. and Canada have some of the largest trading partnerships in the world. They conducted about $916 billion worth of trade in goods and services last year. Now, ultimately, Carney sort of outlined his strategy going into today, saying that he wants to focus beyond just sector-specific tariffs, but to look at this comprehensively, because Canada really is getting hit from all angles here, considering that they do have that 25% levy in place, excluding USMCA compliant goods, that 10% levy when it comes to energy and some components that go into fertilizer, but then those sector-specific tariffs that hit their economy particularly hard, like steel and aluminum, and also autos. I will say that President Trump did give us some preview into how he's thinking about this meeting as we wait for him to arrive here. He posted moments ago on Truth Social. Just to read you a little of it, he said, quote, "We don't need anything they have other than their friendship, which hopefully we will always maintain. They, on the other hand, need everything from us." And that is going to be his main question to the Prime Minister later today.
There's $900 billion of trade here between the two countries. This seems like something you'd want to work out sooner rather than later. And Mr. Carney just won a national election promising to get Canada through this. Do we have any idea the strategies Mr. Carney may try to employ here?
Right. Well, he's definitely going to try to appeal to President Trump, since we know that personal relationships are proving to be perhaps an effective tool, reaching out directly to this White House, as the president says that he is directly involved in any negotiations going forward. I think it's fair to say that President Trump and Mark Carney have a relatively warmer relationship compared to the relationship with former Prime Minister Justin Trudeau. Of course, President Trump has called Mark Carney a very nice man, and Carney has said that President Trump is one of the best negotiators. But we can't forget, and we need to keep in mind, that Carney really did campaign and win his election on the fact that he wants to counter this White House and its tariff policies. In his acceptance speech, Paul, he said that the U.S. and Canadian relationship is forever changed because of President Trump.
What's the vibe right now at the White House? It feels like it's been relatively calm. And what that vibe is could be very key sort of going into this bilat. Can you give me some color on that?
Yeah, definitely. I mean, one thing is for sure, while it might be calm, the White House still definitely wants to show some sort of forward progress when it comes to trade deals. Not necessarily for Canada, we should be clear. The Commerce Secretary, Howard Lutnick, in an interview yesterday, when asked if he was optimistic if there could be a trade deal with Canada, he replied that it is a complex situation, but that ultimately he thinks it's going to be a fascinating meeting today. But it is clear that officials want to show that there has been progress, at least on other fronts, including those economies, such as in Asia, that we know that this White House has been prioritizing as they try to move ahead the trade negotiations. You had Scott Bessent on Capitol Hill earlier today that reiterating that we could potentially see some sort of framework agreement as soon as this week, but that ultimately he thinks that 80 to 90% of deals with our top 15 trading partners could come by the end of this year. So we're really going to have to watch and see, because this White House wants to get the trade deal done, and they're also starting to divert attention to the tax side of things, not to change the conversation too much, but this White House really is banking on that reconciliation package getting through, and lawmakers are back in Washington this week getting to work on that.
Tyler, thanks so much for your reporting. Really appreciate it. Tyler Kendall, she's a reporter, Bloomberg News. She is at the White House today, and we're waiting for Canadian Prime Minister Carney to arrive at the White House for meetings with President Trump on trade, economic relationship, and other topics. I wonder if the topic of the 51st state will come up on the agenda.
Or do they nicely just kind of stay around that? Or step around that for the end of the day. Interesting, Canadian exports to the U.S. in the most recent data fell about 6.6% in March. That is the largest drop since the COVID-19 pandemic, while imports from the U.S. fell 2.9%. So we're already seeing sort of that dynamic being pulled forward, and when it kind of works its way out, which is definitely a TBD.
Yeah, it's going to be interesting to see really at the end of the day to when these tariffs are implemented, to what degree are they implemented, to what concessions are there, what exemptions are there. You just got to have to stay on top of it because it is a very fluid situation. Fortunately, we have a whole army of journalists and analysts around the world that can help us do that, including up in Canada. Melissa Shin joins us, Toronto bureau chief for Bloomberg News. She's up there in Toronto. Hey, Melissa, as Prime Minister Carney makes his way to the White House, what's the feeling of Canadians broadly defined about what they want to see with a relationship with the U.S., a trade deal with the U.S.? Have things really changed?
Yes, I think they have. We've seen boycotts of U.S. goods. We've seen people in Canada deciding not to travel to the U.S. as sort of a form of protest economically. And there's really been a change in sort of the sentiment. I think a lot of Canadians still feel very strongly that a good relationship between Canada and the U.S. is a great idea. But people are offended, they're disappointed, they're insulted by what has happened down in the U.S. And so there's a lot riding on this particular meeting. There's a lot of hope for something to happen, but Prime Minister Mark Carney has also downplayed expectations. He said, do not expect white smoke to come out of this meeting. It's an initial meeting, and hopefully there will be something that we can sink our teeth into afterward.
What would be a win for Carney?
I mean, the bar is kind of low in the sense that, we're hoping that Canada is not being called the 51st state. We noticed in the Truth Social post that wasn't the case, calling him Prime Minister Mark Carney as opposed to governor, which was what his predecessor was called as a joke or insult. So something other than that definitely is positive. But, a win on the very far side of optimism would be, a return to the pre-existing trade relationship that was actually negotiated by Trump in his first term, the USMCA, which would be certainly a positive, and of course a cessation of taunts that would suggest that Canada would be the 51st state.
What's just sentiment among the average Canadian, Melissa, here about because I guess one of the questions I get asked is President Trump's view of Canada, is that shared by most Americans? I don't know the answer to that. It's certainly not shared by me. I mean, I think people felt like Canada's our friend to the north. That's the kind of way we've always thought about it. Are Canadians starting to question that now?
In a way, I think, again, it's only been a couple of months, thank goodness, that this type of rhetoric has been the case. There's a lot of towns and cities that have a great connection. They're on the borders. We've seen, people, unfortunately, that live in Canada avoiding those towns. That's had a really big impact on the economies of towns like Point Roberts in Washington. And so, there is this fracture. There is, as I said earlier, this anger, this insult. And there is this sense that perhaps there is a relationship that has changed, but it is a long-standing relationship. So we hope that there can be a positive outcome.
It's important also to sort of help understand the economic landscape in Canada, irrespective of the tariffs. Like, I always feel like the election would have been so different if the election was held like 8 months ago. Can you give me some perspective on that?
Yes, absolutely. Just as we saw in Australia and in our election about a week ago, certainly the economic situation has become much more acute because of the tariffs. But as you said, Canada has had a productivity challenge, a housing crisis. The standard of living has fallen. Some of that is because of the COVID-19 pandemic and the vast challenges that came with that, the rise in inflation. So there are folks who are feeling that they're not able to get ahead. And like you said, if this election had happened 8 months ago, those concerns were certainly at the forefront, and that is when perhaps there would have been a different result.
How strong of a hand do you think Prime Minister Carney has as he makes his way to the White House here? Can he say with confidence that he represents, the majority of Canadians?
Well, funny you ask that. His election, the election a week ago, he was elected with a minority. Can I say with confidence that he has the majority of Canadian support? The facts at that point, with the result from the election, do not bear that out specifically. But, I think after the election, folks have come together to say, this is the result, this is our leader, and, regardless of political differences, we do want to see a positive outcome from a relationship with the U.S. And so, a lot of folks have sort of said it's time for unity, and so that's what we're seeing.
All right, Melissa, thank you so much. Really appreciate it. Melissa Shin, Toronto Bureau Chief, joining us there. And remember, we are awaiting Prime Minister Mark Carney of Canada to arrive at the White House for a bilateral meeting with President Trump. We will, of course, bring you all the headlines and any sort of remarks that they make as it happens. Back to the market here, a little bit heavier in a broad equity sense. We definitely have earnings that are still coming out. The reactions, though, a little surprising. For example, Ford suspends its full-year financial guidance, right, Paul? And then says that President Trump's auto tariffs are going to take a toll on profit. Guess what? The stock is
trading higher,
up 3.3%. And it's interesting. We saw a different one with Palantir, right? Their numbers really super solid, and then the stock sells off big.
Yep. So I think a lot depending upon the story, the company, and kind of their economic exposure to global trade, to tariffs. There are different stories to tell, but we've seen it across a whole host of industries. Companies either saying, we're just not sure about our outlook, so therefore we're not going to provide an outlook, or here's our outlook, but it's got a lot of caveats around it. But it seems like most industries, I can't say every, but most industries are feeling the effect of the economic uncertainty, if not the tariffs directly, and that is reflected not so much in their quarterly results, but certainly in their guidance.
Yep. And so let's get more to that with Steve Mann, Bloomberg Intelligence Global Autos and Industrial Research Analyst. So Ford suspending its full-year guidance and talking about tariffs taking a toll on profit. What was your takeaway here?
Yeah, I think it's normal for these companies to kind of remove their full-year guidance. There's a lot of confusion. We still really don't know what the full impact and what is the impact of these tariffs. There is still hope that some of these will go away. President Trump did give some reprieve for the automakers, but at the end of the day, it's still a big number. We estimate it's going to be an $85 billion impact on the U.S. auto industry alone, just in the next 12 months from these tariffs.
Whoa.
So, well, we'll have to see. Full year guidance, pulling them, it seems like the norm now.
What are the companies? I mean, realistically, are the companies saying, "Hey, we can, I don't know, go to kind of change our sourcing, change our supply chain, or we're committed to trying to pass these along to customers, or we're going to take it in the margin"? Any kind of guidelines here, just in terms of broad strokes?
Yeah, there's been a lot of question at the Ford earnings call on how they're going to approach this. And there's a number of ways. There's a lot of production, full vehicle productions in Mexico as well as Canada. Now, a lot of these automakers do have some spare capacity that they can shift back into the U.S., but it's going to cost them. And some of these costs, the $85 billion I just mentioned earlier, really doesn't include some of these costs on shifting that production back themselves as well as supply chain. So, for example, if you move a plant either from Mexico to Canada back into the U.S., it could cost an upwards of $4 billion. If they have to build a greenfield site. So it's going to be a lot of money to actually reshift the supply chain that's been built, to where it is today over the past 3-4 decades.
All right, I just want to describe right now what's happening is the Prime Minister of Canada, Mark Carney, is getting out of his car, shaking hands currently with President Donald Trump as they head to their bilateral meeting. We will, of course, bring you any headlines as they cross based on their conversation. You can see President Trump and Prime Minister Mark Carney now waving to the press as they now head into the White House. So definitely interested to see how that winds up playing out. Again, we will bring you any headlines as they cross. Hey, Steve, back to the automakers here. Which company, now that we've sort of gotten through a lot of this, is best equipped to handle this uncertainty?
Well, I think it's going to be really tough for automakers. I don't think they really have a good handle onto what the costs are and what they need to do. There's price increases that they can apply to the consumer, and I think that's a very viable option. The other one is moving capacity. And it's going to be a huge cost. One thing that I'm kind of surprised is that the Ford stock is up about 4.5%, because we actually think, their estimate of the impact, the $2.5 billion gross impact to the company is actually a little bit low. Our estimate is closer to $10 billion. I think among the legacy automakers, like if you look at Stellantis, GM, and Ford, we think Ford will have the biggest impact from the tariffs because of their more global strategy around supply chain.
Steve, are we going to see layoffs in the auto industry? Are we going to see plants cutting shifts, maybe shutting down for they can't get parts or the demand might not be there?
Yeah, it's very possible. I think initially we'll see that type of reaction in the market, because if prices do go up, sales will actually dwindle or decrease. And we've already seen that earlier in the year before tariffs. This is going to, exacerbate the slowdown in the auto industry. So we probably will see some layoffs and production cutback. We're hearing from the auto suppliers, a lot of them, most of them, saying that they expect auto production to come off from their already reduced forecast for this year.
When we take a look broadly at auto car sales demand here in the U.S., how is that holding up, especially as we consider the rising price of potential cars and being imported, like a rush to buy now, that kind of thing?
Yeah, I think we have seen some rush to buy now before April. First quarter sales is actually pretty good, but a lot of that is pull forward demand. Prices, we actually do see inventory coming down, supply being cut, and prices will come up as a result, and as a result of the tariff costs. There's news out there that some of the automakers that import cars in the U.S. are actually not releasing those vehicles into the dealer lots. For example, we're seeing increase, vehicle inventory at the Baltimore ports from Volkswagen and Audi. We'll probably see the same thing for some of the Japanese and Korean automakers inventory at the ports out in the West Coast.
Right. All right, Steve, thanks. As always, fluid situation there for the auto industry. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence, joining us from Princeton. Again, Ford stock up about 3%, even though they did take down their guidance. So we don't have, they just withdrew their guidance there. So we'll have to keep an eye on that. Market's selling off a little bit. We got the S&P off about 0.5%. The NASDAQ off about 0.7%. In the bond market, we got the 10-year Treasury yielding about 4.34%. WTI crude oil is higher, bouncing back up here, right just below $60 per barrel for WTI crude oil. Gold, guess what? Higher yet again. So there we go. That does it for Alex Steele and me on this Tuesday. Right now, we're going to hand it over to David Gura for Balance of Power. David, take it away, sir.
Paul, thanks so much. Thanks to Alex as well. This is Balance of Power on Bloomberg Radio and on YouTube as well. David Gura in for Joe Matthew and Kaylee Lyons here in the nation's capital in Washington, D.C. As we are paying close attention to what's taking place at the White House this afternoon. The Prime Minister of Canada, Mark Carney, 24th Prime Minister of Canada, making the trip down from Ottawa to Washington to meet with President Trump. A couple of items on the agenda, a meeting one-on-one between these two leaders and a luncheon as well. Anticipate we're going to get some comments from both of them as the afternoon unfolds. Of course, we'll bring those to you live. Scott Bessent, the Treasury Secretary, up on Capitol Hill today, testifying before a House panel just a day after he appeared at the global conference organized by the Milken Institute, talking to investors directly, making the case for American exceptionalism as this trade war continues. We're going to go back to the Milken Institute a little bit later this afternoon. We anticipate hearing from Jenny Johnson, the CEO and president of Franklin Templeton. But before we get to all of that, let's get a Bloomberg Business Flash with Amy Morris. Amy?
David. Trade deficit in goods and services did set a record in March. Imports of consumer goods posted an all-time high, led by pharmaceuticals, as businesses rushed inbound foreign shipments to beat U.S. tariffs. Wall Street's risk-off mode prevailed in the countdown to the Fed decision this week, with stocks falling as disappointing corporate and economic signals fueled concern about the repercussions of President Trump's trade war. And we do bring you markets all day long here at Bloomberg. The S&P 500 now down about 0.5%. NASDAQ about 0.7% lower. The Dow is down 0.6%. The 10-year Treasury yield at 4.34%. The 2-year yield at 3.79%. Jeffrey Rosenberg at BlackRock says investors still don't have enough certainty.
We're, having a nice little rebound from the April, Liberation Day surprises, and we're not out of the woods in terms of the uncertainty here, and it's tough to measure.
BlackRock's Jeffrey Rosenberg and Frederick Merz got the backing of Parliament, a second vote for Germany's next chancellor. It comes as Germany's economy stagnates and support for the far-right alternative for Germany is strengthening. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now we go back to Balance of Power with David Gura.
Amy, thank you very much. David Gura here in for Joe Matthew and Kaylee Lyons. Again, watching the action at the White House, waiting to hear from Prime Minister Mark Carney of Canada, who's visiting Washington today, and President Donald Trump, having a meeting in the Oval Office and a luncheon after that. I want to dig into sort of the import of that meeting, which comes just about a week after the latest federal election in Canada, and some heated words exchanged verbally and via social media posts between these two leaders, and President Trump setting the table today for this conversation, posting on Truth Social this morning. I look forward to meeting the new Prime Minister of Canada, he writes. I very much want to work with him. He then says, we don't need anything they have other than their friendship, which hopefully we will always maintain. They, on the other hand, need everything from us. So again, the president setting the table for this conversation. We'll see if the issues of sovereignty comes up in addition to talking about trade and tariffs policy. Nathan Dean joins me here in the studio in Washington, senior U.S. policy analyst for Bloomberg Intelligence. Let me start with a broad question. What does each of these leaders want out of this meeting today? There was a lot of bombast from Mark Carney on the campaign trail. Sovereignty was not a negotiable thing, he said over and over again. He's promised to stand firm when it comes to issues of trade. Walk us through for both him and for President Trump what they hope to get out of this meeting in the White House today.
I think both leaders want incremental wins. I don't think you're going to expect much. Look, I don't think nobody's anticipating a trade deal is going to come out of this meeting, but I think you get incremental wins. When it comes to the Prime Minister Carney, I think it's just a signal that there's going to be additional negotiations. For President Trump, obviously he wants to see that something that Canada is giving, whether it's, a change of non-tariff related measures or price controls or something like that. And when President Trump says on Truth Social that, there's nothing that we don't need, well, our analysts think differently. I mean, when you talk about the energy sector, the agricultural sector, Steve Bann was just on talking about automobiles. For the investment point of view, I think the best thing that can come out of this meeting is that there is a decision to keep talking, a decision to keep negotiating, and that the rhetoric doesn't go much higher than it already has.
What is your assessment of the temperature when it comes to this bilateral relationship? So you bring up the auto sector. You and your colleagues have been tracking all of kind of the changes and walkbacks and postponements and pauses when it comes to these trade deals. When it comes to the U.S.-Canada negotiations, on that long list of bilateral negotiations the White House says it's having, how hot is it? Where do things stand in that conversation?
So I was in New York last week, and I think when talking with all the traders that I talked about going around Midtown, it was all the focus was on India, South Korea, and Japan. The idea in Asia, Canada, I would call it in that second tier. Now, look, Canada and Mexico, extremely important. I mean, obviously, they're our biggest trading partners, but I think from the market perspective, they really want to resolve what's going on with U.S. and China. Treasury Secretary Scott Bessent sort of hinted today that there really isn't any pathway right now between the U.S. and China. So in this meeting with Prime Minister Mark Carney and President Trump, if there's any indication that this can move forward to a trade deal, and I'm going to use deal in air quotes, maybe call it a memorandum of understanding, just even a couple of pages with bullet points. That's something the market can actually start to say, look, now we can start negotiating. Now we can start moving towards that pathway where when Secretary Bessent says deals are coming, if there's any indication of this meeting that we're moving on that path, I think the market may actually look at that meeting and say, okay, let's take a breather here.
Let me, if I may, pull you away from policy for just a moment to the politics of this moment, and you've watched any number of these meetings unfold. What have we learned about how world leaders should comport themselves when they're in a venue like this, in the Oval Office with the president? Yes, so much attention is being paid to what deals may or may not come out of a meeting like this one. We've seen a variety of approaches from world leaders when it comes to being in the spotlight like this.
Well, you and I were just watching, the handshake before we went on the air.
Fist, pumped his fist as well.
Prime Minister Carney pumped his fist. I mean, we didn't see the President Macron, 30-second handshake here. But, what I would say is that, President Trump always has his persona that he is online, but then he has a different persona when he's actually in the White House. And I would think that, the Prime Minister's perspective, look, he just won an election on the fact that he's going to be an anti-Trump candidate and that he is going to be very much Canada first, to use that term. So, it certainly will be interesting to see what a fly on the wall in that conversation looks like. But I think that if, they focus on actual specifics of the trade negotiations rather than things on like being the 51st state, then obviously, the markets can actually, say this is something that we can move forward and we can work with.
I want to ask you mentioned Scott Bessent just a moment ago in the comments that he made on Capitol Hill today. How would you characterize his message, what he's saying yes to markets and investors, as he said yesterday, his message to lawmakers as well, how he's kind of characterizing or driving home what the Trump administration's economic message is at this point in time?
So he's the calmer in chief. That's what I call him.
Calmer in chief. I love that.
It's one of those things where you look at the market participants and they really want Scott Bessent to be that individual that says, look, there is a lot of rhetoric coming out of the White House, but here's how that rhetoric actually gets implemented. And you hear Secretary Bessent usually use the terms of his three pillars: tariffs, taxes, and deregulation.
We'll leave it there. Nathan Dean, our analyst at Bloomberg Intelligence. We go to the Oval Office. Here we have Mark Carney and Donald Trump sitting in front of that fireplace. As I said, a familiar sight we've seen now with many world leaders. Let's dip in to hear what these two leaders have to say. See here a traditional pool spray, so a small group of reporters and photographers, they're in the Oval Office taking photographs.
Thank you very much, everybody.
Now, the President of the United States.
It's a great honor to have Prime Minister Mark Carney with us. As you know, just a few days ago, he won a very big election in Canada. And I think I was probably the greatest thing that happened to him, but I can't take full credit. His party was losing by a lot. And he ended up winning, so I really want to congratulate him. It was probably one of the greatest comebacks in the history of politics, maybe even greater than mine. But I want to just congratulate you. That was a great election, actually. We were watching it with interest, and I think Canada chose a very talented person, a very good person, because we spoke before the election quite a few times. And it's an honor to have you at the White House and the Oval Office. And you see the new and improved Oval Office as it becomes more and more beautiful, with love. We handle it with great love, and 24-karat gold. That always helps too. Right? But it's been a lot of fun. We're going over some of the beautiful pictures that were stored in the vaults that were for many, many years. In some cases, over 100 years. They were stored in vaults of the great presidents, or almost great presidents, all having a reason for being up, every one of them. So it's very interesting. But I just want to congratulate you, and ran a really great race. I watched the debate. I thought you were excellent, and I think we have a lot of things in common. We have some tough points to go over, and that'll be fine. We're going to also be discussing Ukraine, Russia, the war, because Mark wants it ended as quickly as I do. I think it has to end. We had some very good news last night. The Houthis have announced that they are not, or they've announced to us at least, that they don't want to fight anymore. They just don't want to fight. And we will honor that, and we will stop the bombings, and they have capitulated, but more importantly, we will take their word. They say they will not be blowing up ships anymore, and that's what the purpose of what we were doing. So that's just news. We just found out about that. So I think that's very, very positive. They were knocking out a lot of ships going, as you know, sailing beautifully down the various seas. It wasn't just the canal, it was a lot of other places. And I will accept their word, and we are going to stop the bombing of the Houthis, effective immediately. And Marco, you'll let everybody know that, okay? Do you have something to say about that, by the way? It's a pretty big announcement.
Yeah, this was always a freedom of navigation mission. These guys, these are, a band of individuals with advanced weaponry that were threatening global shipping. And the job was to get that to stop. And if it's going to stop, then we can stop. And I think it's an important development.
And we'll have maybe before, we're going to, as you know, the Middle East, Saudi Arabia. We're going to UAE and Qatar. And that'll be, I guess, Monday night. Some of you are coming with us. I think before then, we're going to have a very, very big announcement to make, like as big as it gets. And I won't tell you on what, but it's going to, and it's very positive. I'd tell you if it was negative or positive. I can't keep that out. It is really, really positive. And that announcement will be made either Thursday or Friday or Monday before we leave. But it'll be one of the most important announcements that have been made in many years about a certain subject, very important subject. So you'll all be here. Mark, would you like to say a few words?
Well, thank you, Mr. President. I'm on the edge of my seat, actually,
I
for the
know.
big announcement. But thank you for your hospitality and above all, for your leadership. You're a transformational president, focus on the economy with a relentless focus on the American worker, securing your borders, ending the scourge of fentanyl and other opioids, and securing the world. And I've been elected with my colleagues here, with the help of my colleagues here. I'm going to spread the credit to transform Canada with a similar focus on the economy, securing our borders. Again, on fentanyl, much greater focus on defense and security, securing the Arctic and developing the Arctic. And the history of Canada and the U.S. is we're stronger when we work together, and there's many opportunities to work together. And I look forward to, addressing some of those issues that we have, but also finding those areas of mutual cooperation so we can move forward.
That's great. Very nice. Thank you very much. It's a very nice statement.
Mr. President,
Anybody?
Is USMCA dead?
No, it was actually very effective, and it's still very effective, but people have to follow it. So, that's been a problem. People haven't followed it. But it was a transitional step a little bit, and as you know, it terminates fairly shortly. It gets renegotiated very shortly. But I thought it was a very positive step from NAFTA. NAFTA was the worst trade deal in the history of our country, probably in the history of the world. And this was a transitional deal, and we'll see what happens. We're going to be starting to possibly renegotiate that if it's even necessary. I don't know that it's necessary anymore, but it served a very good purpose. And the biggest purpose it served is we got rid of NAFTA. NAFTA was a very unfair deal for the United States. A very, very terrible deal. It should have never been made. It was made many years ago, but it should have never been made.
Canada and the United States, would you like to see your first trade deal be with Canada? Our neighbors in the world?
I would love that. Look, I have a lot of respect for this man, and I watched him come up, in a sense, through the ranks when he wasn't given much of a chance, and he ran a really great campaign. He did a really great debate. I think that debate was very helpful. I was going to raise my hand. I don't know if that's good or bad. I shouldn't say that. That might hurt you. But no, he ran a really great election, I thought. And yeah, something could happen. Something could happen. Yeah, please.
What's the top concession you want out of Canada? The top concession you want out of Canada?
Concession?
Yes.
Friendship.
But that's not a concession.
No, we're going to be friends with Canada. Regardless of anything, we're going to be friends with Canada. Canada is a very special place to me. I know so many people that live in Canada. My parents had relatives that lived in Canada, my mother in particular. And no, I love Canada. I have a lot of respect for the Canadians. Wayne Gretzky, I mean, how good, the great one. You happen to have a very, very good hockey player right here on the Capitals, who I have a lot of. He is a big, tough cookie too. He just broke the record, and he's a great guy. And you know, we had the team here, and I got to know a lot of the players. But now Canada is a very special place. Yeah, please.
Mr. President, Mr. Prime Minister, I'd like to get your response to this too. Mr. President, you have said that Canada should become the 51st state.
Yeah. No. Well, I still believe that, but you know, it takes two to tango, right? But no, I do. I mean, I believe it would be a massive tax cut for the Canadian citizens. You get free military, you get tremendous medical cares and other things. There would be a lot of advantages, but it would be a massive tax cut. And it's also a beautiful, you know, as a real estate developer, you know, I'm a real estate developer at heart. When you get rid of that artificially drawn line, somebody drew that line many years ago with like a ruler, just a straight line right across the top of the country. When you look at that beautiful formation when it's together, I'm a very artistic person, but when I looked at that beauty, I said, that's the way it was meant to be. But, you know, I do feel it's much better for Canada, but we're not going to be discussing that unless somebody wants to discuss it. I think that there are tremendous benefits to the Canadian citizens, tremendously lower taxes, free military, which honestly we give you essentially anyway, because we're protecting Canada if you ever had a problem. But I think, it would really be a wonderful marriage, because it's two places that get along very well. They like each other a lot.
Well, if I may, as you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, you know, Buckingham Palace, that you visited as well.
That's true.
And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever. But the opportunity is in the partnership and what we can build together. And we have done that in the past. And part of that, as the president just said, is with respect to our own security. And my government is committed for a step change in our investment in Canadian security and our partnership. And I'll say this as well, that the president has revitalized international security, revitalized NATO, and us playing our full weight in NATO, and that will be part of it.
And they have, I must say, Canada is stepping up the military participation, because Mark knew, you know, they were low, and now they're stepping it up, and that's a very important thing. But never say never. Never say never.
What would it take to get the tariffs off of Canada?
Well, we'll be talking about different things. Like, you know, we want to protect our automobile business, and so does Mark. But we want to make the automobiles, and we want to, you know, we have a tremendous abundance of energy, more than any country. We have, just in Alaska alone, ANWR has been reopened now. ANWR is probably the largest find anywhere in the world. They say it's larger than Saudi Arabia. I don't know, but it's a lot. But we have tremendous amounts of energy. Other countries don't. We're both lucky in that way. They have energy, we have energy. We have more than we can ever use, and more than we could ever sell, actually, and you have the same thing. So we're two countries that are very lucky. If you look at China, they don't have that. You know, it's a big disadvantage. Other countries, most countries don't have, you know, most countries don't have that. So Canada and us, we have a lot of advantages over other places.
Mr. President, when you consider what Mr. Carney just said, that Canada is not for sale, does this make the discussion a little more difficult to start on?
No, not at all. No, not at all. No, time will tell. It's only time. But I say never. I've had many things that were not doable, and they ended up being doable, and only doable in a very friendly way. But if it's to everybody's benefit, you know, Canada loves us and we love Canada. That's, I think, the number one thing that's important. But we'll see. I mean, over time, we'll see what happens.
Mr. President,
China.
I was hoping you could clarify
They want to meet, and they're doing no business right now. And those ships are turning around in the Pacific Ocean. Big turn, those are big ships. Those ships take about 10 miles to turn. And, you know, we lost $1 trillion to China on trade because of an incompetent president that we had who preceded me, grossly incompetent. You're finding it out more and more now. And by not trading, we're losing nothing. So we're saving $1 trillion. It's a lot. But they want to negotiate and they want to have a meeting, and we'll be meeting with them at the right time.
But you haven't met with them yet?
I have not met with them, no, of course. You would know if I met. I'd tell you. They want to meet, but, you know, we are right now, look, they're suffering greatly. Their economy is suffering greatly because they're not doing trade with the U.S. And they made most of their money off the U.S. Don't kid yourself. They don't make the money off other countries like this. And they were making, we had a trade imbalance. We had a deficit, or they had a surplus, another way of saying it, of more than $1 trillion. Think of it, more than $1 trillion. And because of 145%, that's the only reason, but because of, they have now 145% tariff, there's no trading. You can't trade with 145%. We are, therefore, making, in a certain way, I guess, $1.1 trillion. In other words, we're not losing $1.1 trillion. Our deficit is much better. When I started, I say we were losing billions of dollars a day on trade. That's rapidly turning around. We looked at numbers this morning. So we were losing, the United States during Biden was losing more than, I won't even give you numbers because they're so embarrassing, but billions of dollars a day on trade. Those numbers are rapidly turning between the tariffs. Don't forget, we're now getting 25% on cars, 25% on aluminum, 25% on steel, and maybe more importantly, massive numbers of companies are moving into the United States. Honda, we have tremendous, the car companies are moving in at levels we've never seen before. The biggest investment ever made in the United States is being made right now. Trillions of dollars. I would say we could be at $9 trillion. You could go back to other presidents. They haven't had $1 trillion for their entire term. Look at Biden. He had bad numbers. People were leaving. They weren't coming in. They were leaving with Biden, and he didn't know the difference. The only thing he knew is people coming in. You know who they were? Illegal immigrants, okay, from prisons, from mental institutions, from all sorts of places that weren't good, from gangs, from Venezuela. They were coming in and they were criminals and murderers, 11,888 people that murdered, and at least half of them murdered more than one person. This is what Biden led into our country. I'm bringing in big companies. We have Apple is investing $500 billion. We have Jensen, as you know, is going to be 500 biggest chip maker, or chip thinker, I call him. He's really a thinker more than a maker. But we also have the maker, Mr. Wei. I get to know them all in the last, it was a cram course, but they're all moving into America because of the tariffs. And I don't think people have appreciated it. Some people do, some of the smart people do. So we have more money coming in. It's really an amazing thing. We have more money being invested in the United States now than at any time ever before in our history, and it's not even close. And I think the real number could be 9 or 10 trillion. We don't know everybody that's doing it. We have many. I just heard about a plant that's being built right now, a very, very top of the line company. And they didn't come to the White House. They're just doing it because they're making it, because if they build here, there are no tariffs. And this is the big market. This is the market. That sets us apart from it. This is the market where everyone wants to be. Now, if I didn't come here and do this, all of a sudden we wouldn't be the market where everyone wants to be. So we're able to do it in time. But we're going to have a great announcement, and I'm not necessarily saying it's on trade. Going to the beginning, we're going to have a great announcement over the next few days, an announcement that will be so incredible, so positive. And I'm not saying, I don't want you to think it's necessarily on trade. Just to finish, we also have a situation, because everyone says, when are you going to sign deals? We don't have to sign deals. We could sign 25 deals right now, Howard, if we wanted. We don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market. They want a piece of our market. So we can just sit down, and I'll do this at some point over the next 2 weeks, and I'll sit with Howard and Scott and with our great vice president, who has done a really good job. We have some good news to report on a lot of fronts, but JD will be there and Marco, and we're going to sit down and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. And I said, that's okay, you don't have to shop. Now, we may think, well, they have a right, you know, that maybe we were a little bit wrong, so we'll adjust it. And then you people will say, oh, it's so chaotic. No, we're flexible. But we'll sit down, and we'll, at some point, in some cases, we'll sign some deals. It's much less important than what I'm talking about. For the most part, we're just going to put down a number and say, this is what you're going to pay to shop. And it's going to be a very fair number. It'll be a low number. We're not looking to hurt countries. We want to help countries. We want to be friendly with countries. But you keep writing about deals. When are we going to sign? When? It's very simple. We're going to say, in some cases, we want you to open up your country. In some cases, we want you to drop your tariffs. I mean, India, as an example, has one of the highest tariffs in the world. We're not going to put up with that. And they've agreed already to drop it. They'll drop it to nothing. They've already agreed. They would have never done that for anybody else but me. So we're going to put down some numbers, and we're going to say our country is open for business. And they're going to come in, and they're going to pay for the privilege of being able to shop in the United States of America. It's very simple. It's very simple. So I wish they'd keep, stop asking, how many deals are you signing this week? Because one day we'll come and we'll give you 100 deals. And they don't have to sign. All they have to do is say, oh, we'll start sending our ships right now to pick up whatever we want or to bring whatever we want. It's very, very simple. And I think my people haven't made it clear. We will sign some deals, but much bigger than that is we're going to put down the price that people are going to have to pay to shop in the United States. Think of us as a super luxury store, a store that has the goods. You're going to come and you're going to pay a price, and we're going to give you a very good price. We're going to make very good deals. And in some cases, we'll adjust. But that's where it is. And we've been ripped off by everybody for 50 years, and we're just not going to do that anymore. We can't do that. And we can't let any country do that to us. We're just not going to do it anymore.
Can you tell us a bit more about the deal that you've reached with the Houthis?
No, it's not a deal. They've said, please don't bomb us anymore, and we're not going to attack your ships.
And where did you hear about that?
It doesn't matter where I hear it. The very good source, I could tell you. Very, very good source. Would you say, Marco? I would say pretty good, right, JD? A very good source. No, they don't want to be. They don't want to be. They don't want to be bombed anymore. You know, I sort of thought that would happen. No, behind you, please.
Clarifying something you said on USMCA. Is the U.S. prepared to walk away from that pact?
From what pact?
USMCA.
No, it's fine. It's there. It's good. We use it for certain things. It's there. We have the USMCA is a good deal for everybody. I won't say this about Mark, but I didn't like his predecessor. I didn't like a person that worked for. She was terrible, actually. She was a terrible person. And she really hurt that deal very badly because she tried to take advantage of the deal and she didn't get away with it. You know what I'm talking about. But so, you know, we had a bad relationship having to do with the fact that we disagreed with the way they viewed the deal, and we ended it. You know, we ended that relationship pretty much. The USMCA is great for all countries. It's good for all countries. We do have a negotiation coming up over the next year or so to adjust it or terminate it.
Mr. President,
I'll say a word on USMCA, if I may, Mr. President. It is a basis for a broader negotiation. Some things about it are going to have to change. And part of the way you've conducted these tariffs has taken advantage of existing aspects of USMCA. So it's going to have to change. There's other elements that have come, and that's part of what we're going to discuss.
Right.
During the campaign, Prime Minister Carney talked about the American vitriol. How do you react if the
Canada decided not to shop in the American store as much as before and decided to partner with other countries.
Well, we don't do much business with Canada from our standpoint. They do a lot of business with us. We're at like 4%. And usually those things don't last very long. You know, we have great things, great product. The kind of product we sell, nobody else can sell, including military. Look, we make the best military equipment in the world, and Canada buys our military equipment, which we appreciate. But we make the best military equipment in the world by far. The missiles, the submarines, everything. Everything we have is really top notch. I rebuilt our military during our last term. Stupidly, we gave some away to Afghanistan, which shouldn't have happened. But that was, I think it was the most embarrassing moment in the history of our country. It was just very incompetent people. But if you look, the man that's now the head of our Joint Chiefs, he led the attack on ISIS for me. That's why he's the head of the Joint Chiefs. And Raisin Kane, he was unbelievable. And as you know, we defeated ISIS in 3 weeks. It was supposed to take 5 years. We did it in 3 weeks. And he ran the campaign. I said, I like him. But I knew him before. I went to Iraq, and we agreed to a plan, and that was the plan. And as you know, we did it in record time. So we have, you know, we have the best equipment in the world. We have the best, a lot of things. And but Canada, it does a lot more business with us than we do with Canada. Yeah.
Mr. President, can I ask you about your investments, Mr. President? When do you think the investments that you've announced, the trillions, will finally hit economic data this year?
When you're saying about the tariffs?
No, about the investments that you've announced.
Oh, it's hitting right now. Look, they're already starting AI plants. These are not people that look for financing. That's a good thing. You know, in real estate, you get a site, then you have to look for financing, you have to get your zoning, you know, 5 years later you start building, you get a bank, then the bank's no good. And these people have massive amounts of cash. The CHIPS Act was a ridiculous thing because that doesn't get them to build. All we did is hand very wealthy companies money. The CHIPS Act that was done by Biden, billions, we give them billions of dollars. They don't even have to do anything with it. And then if you weren't, if you didn't have, and I don't want to be a wise guy, but if you didn't go with the DEI, if you didn't go with all of the different things, woke, if you weren't woke, you couldn't even use the money. You had to have a certain percentage of this and that and that and that. It's impossible to have. The companies actually complained to me. They said they gave me all this money, but nobody can get these people to do anything. I mean, look, President Obama, and if he wanted help, I'd give him help because I'm a really good builder and I build on time, on budget. He's building his library in Chicago. It's a disaster. And he said something to the effect, I only want DEI, I only want woke. He wants woke people to build it. Well, he got woke people, and they have massive cost overruns. The job is stopped. I don't know. It's a disaster. And I don't like that happening because I think it's bad for the presidency that a thing like that should happen. He's got a library that's a disaster. And he wanted to be very politically correct, and he didn't use good, hard, tough, mean construction workers that I love, Marco. I love those construction workers. But he didn't want construction workers. He wanted people that like never did it before. And he's got a disaster in his hands, like millions of dollars, many, really many millions of dollars over budget. And I would love to help him with it, or somebody else. I could recommend professionals, but it was not built in a professional manner. By the way, nor was in California a little train going from San Francisco to Los Angeles that's being run by Gavin Newsom, the governor of California. Did you ever hear of Gavin Newsom? He has got, that train is the worst cost overrun I've ever seen. It's like totally out of control. So then they said, all right, we won't go into San Francisco. We'll stop 25 miles short. And we won't go into Los Angeles. We'll stop 25 miles short. It's hundreds of billions of dollars for this stupid project that should have never been built. And then they realized that it would have been a lot less costly if we just gave limousine service back and forth and gave it free. They would have saved hundreds of billions of dollars. They have airplanes that go there for one 100th the cost. And they have cars. They have a thing called the highway that goes back and forth that's not fully utilized. And they got involved with this project. And Gavin, you know, I always liked Gavin. I had a good relationship with him. I just got him a lot of water. You know, I sent in people to open up that water because he refused to do it. And we just got him a lot of water. If they would have had that water, and if they would have done what I said to do, they wouldn't have had the fires in Los Angeles. Those fires would have been put out very quickly. But if you think about it, and you got to take a look at this, it's the worst cost overrun I've ever seen. I've watched a lot of stupid people build a lot of stupid things, but that's the worst cost overrun I've ever seen. What's happening between San Francisco and Los Angeles. And you ought to ask about that, because this government is not going to pay. I told our very great new Secretary of Transportation, he's doing a good job, Sean Duffy, I said, we're not going to pay for that thing. They are just, it's out of control. This is something that you don't have things like this. It's not even conceivable. Like 30 times over budget, 30 times. It's the craziest thing and now it's hundreds of, it was supposed to be a simple train. And I think the media should take a look at it. And I'd love him to run for president on the other side. You know, I'd love to see that. But I don't think he's going to be running, because that one project alone, well, that and the fires and a lot of other things, pretty much put him out of the race.
Mr. President, what changes would you like to see to the USMCA? Or what changes would you like to see?
We're going to work on some subtle changes, maybe. I don't even know if we're going to be dealing with USMCA. We're dealing more with concepts right now. Look, right now, we're doing trade. We have trade. They're paying a tariff on cars and steel and aluminum. And I think we have a baseline of 10% or something like that for the tariffs. But we're getting along very well. Right now, going no further, but we have an agreement. We did something with even parts. You want to discuss that, Howard, with respect to Canada, which helps Canada out?
Sure. So we've made an arrangement with the car companies that 15% of their USMCA parts are included, and then 15% of foreign parts from the manufactured suggested retail price are not tariffed, to help domestic manufacturing really thrive.
So it gave them a chance to be able to build their car parts factories if they're going to. A lot of these companies already have factories, and what they have to do is just fill them out. But they're able to build them in the United States, so we gave them a pretty substantial period of time.
Just to clarify, Mr. President, is there anything the Prime Minister can say to you today to change your mind on tariffing Canada?
Tariffing cars?
Tariffing Canada. Is there anything he can say to you in the course of your meetings with him today that would get you to lift tariffs on Canada?
No.
Why not?
Just the way it is.
What's the first state? If Canadians don't want it, would you respect that?
Sure, I would. But this is not necessarily a one-day deal. This is over a period of time they have to make that decision. Yes, go ahead.
Yeah, if I may. Respectfully, Canadians' view on this is not going to change on the 51st state. Secondly, we are the largest client of the United States in the totality of all the goods. So we are the largest client of the United States. We have a tremendous auto sector between the two of us, and the changes that made have been helpful. 50% of a car that comes from Canada is American. That's not like anywhere else in the world. And to your question about is there one thing? No, this is a bigger discussion. There are much bigger forces involved, and this will take some time and some discussions, and that's why we're here, to have those discussions, and that is represented by who's sitting around the table.
See, the conflict is, and this is very friendly. We're not. This is not going to be like we had another little blow up with somebody else. That was a much different. This is a very friendly conversation, but we want to make our own cars. We don't really want cars from Canada, and we put tariffs on cars from Canada, and at a certain point, it won't make economic sense for Canada to build those cars. And we don't want steel from Canada because we're making our own steel, and we're having massive steel plants being built right now as we speak. We really don't want Canadian steel, and we don't want Canadian aluminum and various other things, because we want to be able to do it ourselves. And we, because of past thinking of people, we have a tremendous deficit with Canada. In other words, They have a surplus with us. And there's no reason for us to be subsidizing Canada. Canada's a place that will have to be able to take care of itself economically. I assume they can. I will tell you that Trudeau, when I spoke to him, I used to call him Governor Trudeau. I think that probably didn't help his election. But when I spoke to him, I said, so why are we taking your cars? Why are we taking your, we want to make them ourselves. I mean, I said, and if the price of your cars went up, or if we put a tariff on your cars of 25%, what would that mean to you? He said, that would mean the end of Canada. He actually said that to me. And I said, that's a strange answer, but I understand his answer. But no, I mean, it's hard to justify subsidizing Canada to the tune of maybe $200 billion a year. We protect Canada militarily, and we always will. We're gonna, you know, that's not a money thing, but we always will. But, you know, it's not fair. But why are we subsidizing Canada $200 billion a year, or whatever the number might be? It's a very substantial number. And it's hard for the American taxpayer to say, gee whiz, we love doing that. Thank you very much. We're going to have a very substantial. Thank you. Thank you very much.
As President Trump there is sitting next to Prime Minister Mark Carney of Canada, flanked by many of their top advisors in what President Trump called the new and improved Oval Office. He took a moment to point out the new gilded frame surrounding the artwork that he's put up in there, but characterized the conversation that he plans to have here with the Prime Minister as a friendly one. He stressed over and over again that the two of them are getting along very well, and had a lot of praise for the President, rather for the Prime Minister of Canada in terms of how he campaigned ahead of the Liberal leadership election and during the federal election last week as well. Touched on a number of major issues, a handful of them in foreign policy, said there's agreement among these two leaders when it comes to Ukraine, for instance, spoke about the Houthis in the Middle East, talked about China as well. There was a question about what Treasury Secretary Scott Bessent said on Capitol Hill today with regard to the status of meetings or negotiations with China. The president said meetings had not happened, but they could happen at the right time, stressed that China wants to meet, and they could sign 25 deals right now if they wanted to, but very much positioning the United States, positioning this administration as in the catbird seat as those negotiations continue. Notably, during those comments, we saw the strengthening of the Canadian dollar and the Mexican peso as well when the president spoke about the USMCA, that trade deal that supplanted NAFTA. And the president had a lot of praise for that deal, didn't have a lot of criticism of the deal over the course of those comments. He said that it's good. There are subtle changes that could be put in place there. They might be talking about concepts of what that succeeding trade deal might look like. But said it's sort of the basis of a negotiation, the words of Prime Minister Mark Carney. There was some talk about sovereignty here. The president has threatened Canada's sovereignty over these last many months, referred to it as a potential 51st state. President Trump saying they're not going to be discussing that today. Prime Minister Mark Carney indicating that it should be something that's never discussed, trying to rule it out entirely. The President of the United States saying, never say never. I want to bring Derek Declouet into the conversation now. He's our executive editor for Canada and joins us today from Toronto. He's been watching the prelude to this bilateral meeting unfold with all of us, listening to it as well here on Bloomberg Radio and on YouTube. Derek, great to have you with us. And I wonder if you could just speak to me about the body language that you witnessed there. I think there was a lot of uncertainty about kind of the posturing we would see from these two world leaders at this first meeting between the two of them, with Mark Carney now the 24th Prime Minister. What stood out to you about sort of how they approached this and the way that they spoke to one another and indeed characterized the conversations that are taking place?
I mean, I think the thing that stood out to me was that Trump treated Mark Carney differently than he treated Justin Trudeau. There was more of an element of respect there. Obviously, you know, Trump repeated many of the lines he has used about Canada, you know, over months, including things that, you know, don't really have a, you know, much basis, like the $200 billion subsidy and so on. Talked about, you know, not wanting Canada's cars, all these things that we've heard from Trump a number of times over months, but there was not really an effort by Trump to sort of press the case on making Canada a 51st state. He said, you know, we're not going to really be discussing that today. Not going too far down that road. So Carney didn't speak a whole lot during that, and there was really, I only saw sort of one moment where it seemed like he felt like he had to, stand up to the president in some way, but it was for Carney a lot smoother than it otherwise might have been.
I want to ask you about his approach here as we dig into that a little bit more. And when he did speak, he noted that President Trump is, as he put it, transformational president, a relentless advocate for the American worker. I think the prime minister said, talked about security, talked about fentanyl. So he clearly knew what to say or was well coached on what to say. These are the issues that President Trump has been harping on here over these last many months. These are the issues when it comes to U.S.-Canada relations that President Trump clearly cares a lot about.
Yeah, that's right. I mean, he obviously had had those lines ready, and they were, I'm sure, somewhat music to the president's ears. That he wants to hear those things, and I think it did emphasize the point right at the beginning there that Canada also wants to crack down on the fentanyl trade. I mean, the evidence shows that very little of the fentanyl that goes into the U.S. actually comes from Canada, but Canada has its own fentanyl problem, and it has its own, death rate, overdose rate, and so on. That's not that different from what the U.S. is experiencing. So, this notion that sort of circulated earlier in the presidency when Trudeau was still prime minister that Canada was the major problem here. Trump didn't speak very much about the fentanyl issue, and he said very positive things generally about USMCA, which it was generally a good deal. Of course, it has to be renegotiated, it has to be changed, and so on. But not tossing USMCA out in this meeting, which I think was a bonus. And you saw that in the Canadian dollar, and the Canadian dollar moving at one point to its highest level since October, as the president was speaking.
I want to ask you just a bit more about that. So yes, I noted the strengthening of the currency, the Canadian dollar, and the Mexican peso as well, and sort of beyond the remarks about their friendship and the relationship between these two leaders, we heard the president kind of wax nostalgic about his Trump roots in Canada, having some relations who lived in the country, brought up Wayne Gretzky as a famous Canadian that he has a lot of affection for, brought up Mr. Ovechkin of the Washington Capitals, who I don't think has any Canadian roots or history, but buried within all of that was a lot of talk about this trade deal, and it's one that after it was negotiated by the first Trump administration, the president was very proud of. What is your sense of, as you think about the nuance or changes that might be made there, what the prospects for that look like? Do we have any kind of indication of sort of what granular changes might be approached here by the president and the prime minister?
Well, I mean, I doubt very much that that there will be a lot of sort of really granular stuff dealt with today. But in the longer course of time, it's pretty clear the president is after a few things. One is the auto sector. That Canada exports a little more than 1 million vehicles a year to the U.S. The president would like that to stop altogether. What will that look like? And then some other sectors where Canada's a big exporter. Lumber is one the president has mentioned a number of times. And it didn't come up today that I heard, but the dairy sector, where Canada has a somewhat awkward protectionist stance that's a little bit different than most other sectors, that makes it more difficult for U.S. farmers to sell into Canada. I'm sure that's going to come up because it comes up at every trade negotiation. So we know that there are a bunch of friction points, but there are really 3 or 4 major ones, and I would expect that's where the focus will be when it gets down to a review of the USMCA, whenever that happens.
Derek, one final question for our global audience on Bloomberg Radio and YouTube, who may not be following this story closely, but see the post from this president, which he often talks about there being this subsidization of $200 billion. He brought it up again here during the course of that meeting, then said whatever that number might be, but the U.S. has been subsidizing Canada. Again, for those who haven't been following this closely, what is the president referring to there? Help us make sense of that line of attack that we keep hearing from the president of the United States.
To be honest, nobody's quite certain what he means when he says $200 billion. He's never fully explained it. Now, if he's talking about the U.S. trade deficit with Canada, that number last year was $36 billion, goods and services. It's a little bit higher on the goods side because Canada sells a lot of energy into the U.S. And then the U.S. actually has a trade surplus with Canada. When you net it all out, that's $36 billion. I mean, you can decide for yourselves whether a trade deficit constitutes a subsidy, but that's the number from last year. The president sometimes speaks about military defense and the fact that Canada has not spent 2% of GDP, which is what NATO allies are supposed to spend on military, and that Carney has said he's got a plan to ramp it up to 2%, but it's going to take a number of years. So, is that entering into his calculation? But to be honest, nobody's quite broken down the $200 billion or knows where it comes from.
Derek, great to speak with you. Thank you for the insights, as always. Derek Louette, who's our executive editor for Canada here at Bloomberg News. And for some more perspective on that meeting that's underway at the White House between Prime Minister Mark Carney and President Trump, I want to turn now to our political panel. Rick Davis, a partner at Stonecourt Capital, contributor to Bloomberg Politics, and Ginny Scienzano, senior democracy fellow at the Center for the Study of the Presidency and Congress, and a contributor to Bloomberg Politics as well. Rick, great to see you. Great to talk to you as always. And I'd love to sort of start with where I started with Derek just a moment ago. That is your reaction to how this prelude to the meeting unfolded in the Oval Office. We've seen a number of them as world leaders have made their way to Washington as President Trump has started his second term. What stood out to you as you watched and listened to these two leaders there in the Oval Office?
I was still really amazed by the chill atmosphere in the Oval Office. Previous leaders have gone in there and gotten shanghaied, and here's a guy, Mark Carney, who used Donald Trump as a battering ram in his campaign for prime minister. And as Donald Trump said, created the best comeback you could ever imagine for the Liberals in Canada to win that election. Donald Trump undermining the Conservatives with his hot rhetoric about taking over Canada and making it the 54th state. And yet, you'd think the two were old buddies sitting there next to each other. Donald Trump just, giving all kinds of compliments to Mark Carney. I'm sure Mark Carney was sitting there going, where am I? What am I doing here? Trump even said, we're not going to have a meeting like that other guy, meaning I'm sure Zelensky, when they just pilloried him. So I was quite amazed by the really generous comments by Trump and the atmosphere of being very chill within that Oval Office.
That chill atmosphere. And Ginny, let me turn to you. I mean, there couldn't be a starker contrast between the two types of politicians we saw there in the Oval Office. Mark Carney, a proud globalist, someone who's a technocrat, has helmed two large central banks, now entering politics for the first time as Prime Minister of Canada, and a more bombastic compliment, that being Donald Trump, the President of the United States, there for his second term. Talk, if you would, just about the dynamic between them and sort of what you imagine this meeting, which is going to take place behind closed doors, might look like.
Yeah, I mean, one of the things they share that you just alluded to is they famously both come from the private sector. And it is very clear that Donald Trump did not have a lot of goodwill for Trudeau, Freeland, or some of the other people that worked on his team. And so I think from that perspective, Carney is a welcome change for the president. And of course, the president said, you probably wouldn't be here without me. And that is absolutely true. And it was very typical Donald Trump holding court, talking about how there is a big announcement to be had. It will be Thursday, Friday, Monday, David. We don't know, but it's coming. And even Mark Carney said, wow, I'm, on pins and needles. So from that perspective, it was Trump the showman, and he, was really holding court, and Carney really was very reserved and only pushed back on the issue of the 51st state. And, to which Donald Trump replied, never say never. So, it was very typical Trump, but I was particularly taken by one of the last things Donald Trump said when he basically said in response to a reporter's question, there's nothing Canada can bring. There's nothing that can be said today which would move me to remove these tariffs. And so I think that is a stark reminder. And of course, just before Carney arrived, there was a scathing post on Truth Social from Donald Trump. So I think Carney handled it well, but I think these will be tough negotiations. And Carney said the other day, don't expect white smoke after we have this meeting. And I think that is true. I think it's going to be a long, hard negotiation on these tariffs, but Carney didn't get Zelensky, to Rick's point. So he started with, a positive there.
Didn't get Zelensky. We're going to come back and talk more, I know, over the course of the next hour. But Gina Shianzena, thank you very much for the time. And Rick Davis, thanks for your time as well. As these two leaders, Mark Carney, the Prime Minister of Canada, is now meeting behind closed doors with President Trump of the United States. They're due to have a bilateral meeting. Their advisors there arrayed on the couches in the Oval Office, and then a luncheon after that. And it seems like there's a lot of bon ami, good vibes. Chill atmosphere, as Rick Davis said a moment ago there in the Oval Office. We'll see what that translates to and if there's any kind of announcement that comes out of this. We have yet to see a world leader come to the Oval Office to talk trade, to talk tariffs policy, and emerge with any kind of concrete memorandum of understanding. And the message very much from President Trump there at this meeting is a lot of countries want to make deals with the United States, but it is up to him and his administration to decide with whom they're going to make those deals and when. Continue to follow those meetings, bring you headlines as we get them here on Balance of Power, on Bloomberg Radio, on YouTube and television. David Gura in for Kaylee Lyons and Joe Matthew here on this Tuesday. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
This is Balance of Power on Bloomberg Television and Bloomberg Radio. David Gura in for Joe Matthew and Kayleigh Lyons on this Tuesday as the President of the United States sits down with the Prime Minister of Canada to talk trade and other issues in the White House. We heard from Mark Carney and from Donald Trump just a few moments ago talking about the relationship between the two countries, the outlook for the renegotiation of the U.S.-Mexico trade deal. Saw the Mexican peso, the Canadian dollar strengthen on those comments as the President said unequivocally that deal is not dead and sees opportunity for renegotiation around the edges. Coming up here in the next hour, we're going to check in with our colleagues at the Milken Global Conference in Beverly Hills, California. A very interesting interview sure to take place between Bill Pulte and our Sonali Bossack. Bill Pulte, of course, the head of the Federal Housing Finance Agency at a pivotal time here for Freddie Mac and Fannie Mae. Lots to come, lots to get to here, but first, let's get a check of a Bloomberg Business Flash with our Amy Morris. Amy?
All right, thank you, David. The U.S. trade deficit in goods and services set a record in March. Imports of consumer goods posted an all-time high, led by pharmaceuticals, as businesses rushed inbound foreign shipments to beat U.S. tariffs. Now, President Trump says he will dictate tariff levels for U.S. trading partners rather than engaging in back-and-forth negotiations. And Wall Street's mood is tied to repercussions of the trade war. We do check markets for you all day long at Bloomberg. The S&P 500 down 0.7%, NASDAQ down 0.8%. The Dow down 0.8%. The Russell 2000 index now down 1.1%. The 10-year Treasury yield at 4.34% and the 2-year yield at 3.79%. Treasury Secretary Scott Bessent repeated his warning that his department is on the warning track toward exhausting its capacity to stay within the federal debt limit. He did not say when that might happen. He also told the House Appropriations Committee that Treasury is still tallying the tax revenue from the latest filing season and that Treasury will share with Congress when they're getting close to the default date. Friedrich Merz got the backing of a parliament in a second vote for Germany's next chancellor, coming as Germany's economy is stagnating and support for the far-right alternative for Germany is getting stronger. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back now to Balance of Power with David Gura.
Amy, thank you very much. David Gura in for Joe Matthew and Kayleigh Lyons here on Bloomberg Television and Bloomberg Radio with Balance of Power, a fascinating vote, two fascinating votes, I should say, that took place in Germany today. Our focus now shifts to the White House, where a meeting is underway between President Trump and Prime Minister Mark Carney. The cameras have been moved out of the Oval Office. That will happen behind closed doors. There's a lunch to follow as well, but a lot of good spirits, I should say, in the room, in the Oval Office, as those two leaders sat in front of the fireplace and took a few questions from reporters. Paying close attention to that was our Tyler Kendall, our Washington correspondent here at Bloomberg Television and Bloomberg Radio. And Tyler, I'd love to just get your reaction to the way all of this unfolded. We were watching as Mark Carney got out of the car and walked into the White House. There was a handshake, there were waves, there was a fist raised as well. There seemed to be good spirits among these two leaders, and I wonder how that translated into the comments that you heard in the Oval Office a few moments ago.
Yeah, hey, David, definitely the appearance of good spirits, but at the same time, President Trump did say that there was nothing that Mark Carney could say that would change the tariffs. Likely not welcome news for the Prime Minister as they embark on this first face-to-face meeting here at the White House. At the same time, though, President Trump was rather complimentary of Mark Carney, congratulating him on winning the election, which perhaps you know better than anyone. You were on the ground in Ottawa. Mark Carney campaigned heavily on countering this White House and its trade policies. President Trump did add that he would love to see a deal with Canada, but ultimately there's been very little progress when it comes to these trade talks, at least publicly, and now it appears more uncertain than ever on what President Trump actually would like to see done. Now, when it does come to USMCA, you did allude to this at the top there. President Trump said that it has been effective. He called it a good deal for everyone, but that people need to follow it, saying that there could be subtle changes. Carney chimed in there saying that USMCA does need to change when those terms do expire in July. This is a really high-stakes meeting, David, considering that this is the first face-to-face meeting that these leaders have engaged in, and Mark Carney actually sort of tried to lower the expectations ahead of it, saying that he knows that these are going to be difficult talks, but he ultimately hopes constructive.
And the President, the Prime Minister talking kind of sweeping terms about both the relationship and the trade deal that's in place, the USMCA trade deal right now, talking about kind of nuance and subtlety. Speaking kind of similar terms here about the issue of sovereignty, which I think is one that a lot of people were wondering sort of how the President would broach or what he would say about it over the course of that meeting. He said they were not going to be discussing it during their Oval Office meeting today or at that luncheon as well. let me pull back, and there were some questions from reporters just about the state of play when it comes to trade deals and trade negotiations. A question specific about what kind of meetings may or may not have happened between the U.S. and China, the president responding to that, but also indicating that there are, as he put it, 25 countries who are lying in wait, eager to make a deal with the United States. I'd love to get your perspective on sort of where things stand on this broader issue of trade deals and trade negotiations between this White House and trading partners all over the world.
Right, definitely. And the numbers sort of keep shifting here, but one consistency is that officials keep pointing us to the fact that we could see potential agreements, framework agreements, as soon as this week. Of course, we're not expecting those fully fledged out deals that can take months to negotiate. And we had the Treasury Secretary, Scott Bessent, on Capitol Hill earlier today, actually saying that they are not currently in negotiations with China, but that he does think some of these priority countries that have been given priorities in these talks, including those Asian economies like Japan, South Korea, and India, could see these frameworks announced as soon as this week. He also gave us another timeline, which is that 80 to 90% of the top 15 trading partners could ultimately see deals by the end of this year. That appears to be the broader goal when it comes to this administration. But there is, of course, just still so much uncertainty. Take Canada, for example. There is a long list of grievances here. President Trump highlighting two of them, talking about autos as well as energy. And that really reminds us that these countries that are negotiating, of course, the so-called reciprocal tariff plan, which does not apply to Canada. They were facing their own 25% tariff with USMCA exemptions separately, but all these countries are also facing those sector-specific tariffs, and that's going to be a very important theme going forward here, as this White House really does seem to put forward that these are going to be the more durable tariffs, as President Trump yesterday, David, said that in the next 2 weeks we could see something added to that list when it comes to pharmaceutical-specific tariffs.
Tyler, great to get that update. Appreciate it. That's Tyler Kendall for us there at the White House. Then just going back to that one question a reporter asked, is there anything that Mark Carney could say during the course of this meeting that would cause President Trump to remove those tariffs? President Trump said unequivocally no. So we'll see how all of this progresses. It's a busy afternoon, a meeting, a lunch, and then we're expecting to hear from the Prime Minister of Canada as well, as he holds a news conference a little later this afternoon, about 3 o'clock. Washington time. We'll bring you headlines from that as that unfolds as well. President having a number of events on his schedule as well. Tyler Kendall, just a moment ago, mentioning Scott Bessent, the Treasury Secretary. He was in California yesterday in Beverly Hills for the Milken Institute's Global Conference and delivered remarks directed squarely at some of the most important investors here in the U.S. and around the world. And that's where we're going to return now. My colleague, Shonali Basak, who's the anchor of Open Interest on Bloomberg Television, and our chief Wall Street correspondent is there. She's been conducting a series of important interviews over the course of these last few days. She has another one teed up now here with Bill Pulte, who's the director of the Federal Housing Finance Agency, an agency that oversees Fannie Mae and Freddie Mac at a very pivotal moment for those two institutions. I'm going to toss it to her now in Beverly Hills, California at the Global Conference. Shonali?
Yeah, David, thank you very much for your time. I am alongside Bill Pulte here, a number of members of the administration here at the Milken Global Institute. But Bill Pulte is, of course, the FHFA director, oversees Fannie and Freddie. A big question for Americans as well as investors as well. The first Trump administration did try. They initially tried to free Fannie and Freddie from government control, get it out of conservatorship. What do we know about that experience as you look to maybe take it out of conservatorship this time around?
Well, just generally speaking, you know, President Trump obviously knew what he was doing first term, knew it very well. This time it's like on steroids, and we knew exactly what we needed to do then, and we know even more so what we need to do now. Now, I don't mean that necessarily in terms of privatization. I mean that just generally. For instance, my predecessor was Mark Calabria in the first term. He worked very hard on this issue, but he worked hard on other issues. Many of the ideas that he didn't get done in his first term, we're now able to execute on and really drive performance in the business. And that's really where our focus is right now.
So on the issue of privatization as well, what could be different this time?
Well, I think right now what we're doing is making sure that these businesses are actually functioning as businesses, where people would find them attractive, where they weren't run with big bloat, where they weren't social engineering programs run by, let's say, politicians, but instead where they were focused on safety and soundness and earnings. I mean, Sonali, we had 16,000 people that were working from home, essentially. We ordered them all back to work. We're driving efficiency in these companies. If I told you the waste, fraud, and abuse we found, you wouldn't even believe some of the stuff we found.
Well, be specific there. You've been talking about waste, fraud, and abuse within the agencies. What exactly had been happening?
Well, we, for instance, recently criminally referred some North Koreans and Chinese for working inside of Fannie Mae and Freddie Mac. I mean, what are the Chinese and the North Koreans doing in these companies? That's just one example. I could give you other examples of contracts that we've done. The bureaucracy between FHFA, so the U.S. Federal Housing, which I oversee, and the companies, we're eliminating the unnecessary bureaucracy between the agency and the companies to get things going. I mean, I've closed out probably over 50, I've made 50 plus directives or closures of excessive paperwork, stuff even going back to Obama's time where they were just reporting on them for no reason. The amount of nonsense going on is truly staggering, and these are going to be great American icons once again.
I'm sorry, can you be a little more specific there? When you said that there were Chinese and North Koreans working for the agencies, do you mean non-U.S. citizens? What exactly?
Correct. Correct. There were non-citizens working who were posing as either real Americans or, in some cases, contractors. And we also recently uncovered some other things where some of the Indians were also working inside of the companies as well. So more to come on that. But I think we've referred 5 or 6 different people to the DOJ just in terms of North Koreans and Chinese working in the companies.
So when it comes to your initiative here to really take a look at, you're saying waste, fraud and abuse within the agency, is the idea here to clean up the agencies to become private entities?
Well, ultimately, that would be a question for President Trump. President Trump's going to be, obviously, is the deal maker of the century. I mean, there's nobody who knows how to make a deal better than President Trump. So if and when he does that, we will be ready. We are getting ready for just being operationally efficient, not necessarily privatization. And that is really where our focus is right now. If and when something were to happen, our main focus would be to make sure that there is no disruption to the mortgage market and that there wouldn't be any upward pressure on rates.
So ultimately, when it comes to the efficiency plans, how much does it fall on you versus DOJ efforts to tackle them?
Yeah, DOJ has not been involved in Fannie Mae or Freddie Mac. We would welcome them, frankly, because I think they're very bright people. But we are doing our own cost cutting, our own trimming of the fat, so to speak, and again, getting rid of some of this fraud. But again, we're really ready to focus and have been focusing, at least since I've been in office 8 weeks, on that operational efficiency side of things.
When you're looking at any potential issues across the Fannie Mae, Freddie Mac programs, are you looking at multifamily lending programs specifically?
Yes, I'm very focused on multifamily lending programs. In particular, I was unsettled with some things that I found in multifamily when I first started. That was part of the reason that I did some of the changes that I made at the board level, including the chairmanship, was I felt like I needed to get involved and have the FHFA director be intimately involved in some of the multifamily stuff. And that was one big reason that, you know, we've been a little bit more hands-on, is to make sure that there's none of that nonsense going on. The good news is these are safe and sound businesses, but we're going to make them even safer and sounder.
What types of behavior are you looking into exactly when it comes to multifamily?
Well, there's been some things which we'll be releasing at some point where, you know, people were underwriting certain loans and then flipping them either to friends or to colleagues and then re-underwriting them. So, you know, it's mortgage fraud. You know, we've had a big focus on mortgage fraud. We're going to keep focusing on mortgage fraud because we never want to have another 08 happen again. And under President Trump, we're not going to let that happen.
Now, a little earlier, you also said when it comes to the future of Fannie and Freddie, you are keeping your eye closely on mortgage rates. Of course, there's a lot of concern among a number of lawmakers that privatizing Fannie and Freddie could unleash higher rates. How could you ensure that won't happen?
Well, it's something that my friend and colleague, Treasury Secretary Scott Bessent, and I are laser focused on. We'll be working very closely on that, be studying the issue, figuring out what it is that would make sure that if and when that were ever to happen, it wouldn't be the case. But we're not there yet, and as I said, it will ultimately be up to the president, but look forward to working with the Treasury Secretary and making sure that anything we think about doesn't affect the mortgage market in any negative way.
So have you had specific meetings with the Treasury Secretary or the president about a privatization plan?
I don't want to say what meetings we have or haven't had. I do maintain a good relationship with the Treasury Secretary, and I think that you know, he's a great partner in terms of not just the topics that you're mentioning, but also the day-to-day. You know, Treasury has certain rights and ownership in the company, or rights to ownership in the company. And so I'd say one of the best things about this administration is that everybody is working together for the common goal of making America great again. And I'm very confident that that will lean towards making Fannie Mae and Freddie Mac great again. I'm very confident in it.
Ultimately, we're sitting in a period where a lot of people are looking at this as a very serious affordability crisis in the United States. You have a family that's long been in the real estate business. What do you think the administration could be doing to fix it?
Well, first things first is getting rid of inflation, and President Trump, as far as I'm concerned, has been doing a beautiful job on that end. Why? Because inflation kills the economy. It kills the housing economy. Sonali, for the last 4 years, home prices have skyrocketed. The price of drywall, the price of lumber, the price of cabinets, countertops, shower baths, all the raw materials that go into homes skyrocketed. And it made it so people couldn't afford homes. Yes, we have a supply crisis, but we also have an inflation crisis. And President Trump is all over it. And frankly, it's going to require a lot of work to reverse what's happened the last 4 years.
You know, speaking of the last 4 years, in it, we have seen significant issues with the banking system as well, and a lot of questions about the federal home loan banks as well. This is something where when you're looking at efficiencies across the system, do you also take a look at governance issues as well?
Yes, I'm focused on the FHL banks, as you mentioned. We are the regulator of those banks. I'm very focused on it. I met recently with the presidents of those banks and told them a little bit about my expectations around regulations and making sure that they don't get out over their skis, and that we're going to be focused very closely on it. It's not something that gets a lot of attention, like, you know, the prospective privatization or not of Fannie and Freddie, but those banks are very important, as you know. We have $1 trillion worth of assets on the balance sheet, and we fund a lot of local banks and a lot of local lending. So stay tuned on the banks.
What will change ultimately? Because maybe a lot of other people might not pay attention, but certainly Bloomberg does, the banking system does.
Well, we're going to get rid of the climate requirements and the DEI requirements for board members. These are banks. They need to focus on lending to people in local areas who not only can pay back the loans, but who can benefit from the loans and really spur local economic growth, not on driving climate change programs through these local banks. It's nonsense, and it needs to go. And I told the presidents of the banks that much, and much more to come on that.
Bill, we have to leave it there. That is Bill Pulte, of course, the director of the FHFA. We are here at the Milken Global Institute. David, back to you.
Sonali, thank you very much. And a fascinating interview there with somebody who has a very important job now at a very pivotal moment here in Washington. Bill Pulte, the director of the Federal Housing Finance Agency. And just a few things that stood out to me over the course of that interview is the way that he talked about the regulatory remit that organization has. This is, of course, a fairly new entity within Washington policy and politics. It's been around just since 2008 after the global financial crisis. But this conversation about privatization of those two entities, Freddie Mac and Fannie Mae, is something that's very much a live issue here in Washington. And I was struck, too, when Bill Pulte said, as he thinks about where the organization heads, what it looks like, that DOGE, Elon Musk's team, who's been making radical changes here to the federal government, as he put it, has not been involved in Fannie and Freddie thus far. Again, just a fascinating conversation there, and a chapter in what will be a fascinating story here going forward when it comes to where that organization heads and what happens to Fannie Mae and Freddie Mac. I want to pick up on something else that crossed the terminal here just a moment ago. If you were watching or listening to the president's remarks there in the Oval Office, he spent some time talking about an agreement that he said had been brokered with the Houthis, that they were going to stop attacking ships in the Red Sea. We're getting a response now from the Houthis saying, a spokesman saying, that the group will not stop doing that. There's been no agreement to do that. This is in a conversation with Bloomberg News. The Houthis, through that spokesperson, saying President Trump's statement is not an accurate one. Again, responding to comments made during remarks that took place in the Oval Office ahead of a meeting that is underway right now in the White House between President Trump and Prime Minister Mark Carney, the 24th Prime Minister of Canada. A much anticipated meeting, and we'll continue to bring you headlines from that if there are any more that follow after that closed-door meeting takes place. Balance of Power here on Bloomberg Radio, on Bloomberg Television. David Garay, and for Kaylee Lyons and Joe Matthew.
It's 1:21 on Wall Street. I'm Amy Morris. Stocks moved away from their session lows after Treasury Secretary Scott Bessent signaled that negotiations with several commercial partners are going well. We do check markets for you all day long at Bloomberg. The S&P 500 down 0.6%, NASDAQ down 0.8%, the Dow down 0.7%, really about 0.75% at this point. The 10-year Treasury yield at 4.32% and the 2-year yield at 3.79%. Now, Secretary Bessent said many countries have good offers, reiterating that some deals may be announced as soon as this week, and he noted the possibility of a substantial reduction in tariffs on U.S. goods. But this, even as President Trump says he will dictate tariff levels for U.S. trading partners rather than engaging in back-and-forth negotiations. Secretary Bessent also repeated his warning that his department is on the warning track toward exhausting its capacity to stay within the federal debt limit. He did not say when that might happen. He did tell the House Appropriations Committee that Treasury is still tallying tax revenue from the latest filing season and that Treasury will share with Congress when they're getting close to the default date. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with David Gura.
Amy, thank you very much. David Gura in for Joe Matthew and Kaylee Lyons on Balance of Power on Bloomberg Television and Bloomberg Radio. Meetings at the White House taking place now between the Canadian Prime Minister and the President of the United States. A luncheon will follow, and we expect to hear from the Prime Minister at a press conference he'll convene a little bit later this afternoon. Bring you headlines both from those meetings and that press conference as they cross the Bloomberg. I want to return to it now with our panel, our all-star panel here with me in Washington. We have Rick Davis, partner at Stonecourt Capital, Gina Chianzano, senior democracy fellow at the Center for the Study of the Presidency and Congress, of course, Bloomberg Politics contributors both. Jeannie, I want to ask you sort of what the ideal outcome is from the meeting that takes place today. So it sounds like from the prelude that we got from the President and the Prime Minister, we shouldn't expect a lot of granular details here or any advancement in kind of the standoff when it comes to trade and tariffs policy. What are you looking for or listening for when these meetings conclude?
Yeah, I think the first thing is even if they don't strike a deal, is Carney able to walk this very difficult line of holding the support, which of course he's having trouble forming a government there, but holding the support that got him elected narrowly, and still being able to maintain a positive relationship with Donald Trump. You know, Donald Trump downplaying expectations of a trade deal, so was Carney. But Donald Trump also said never say never. So the ideal scenario would be there is a step forward, that Carney has come with something to offer the president that the president can buy into. And I think the positive thing was that the UMCA, he said, is still a vital agreement if revised. And of course, even if he said that he can't see a world in which he would remove those tariffs imminently, maybe there is be some ground in which they could deal. I think that's what we're really looking for. And of course, then the president also talked about foreign policy, which was interesting, on Ukraine and Russia. So do we see any glimmers of hope for agreement there?
The USMCA not dead, in the words of the President of the United States. And Rick, I want to turn to you just about the uniqueness of these meetings and this bilateral relationship. We're looking at so many of them as these trade deals get hammered out behind the scenes. Of course, the big one is between the U.S. and China, and we got some insight from the president sort of where things stand there, that there's an eagerness on the Chinese side, as he said, for there to be a meeting, for one to take place. When you look at how this meeting is unfolding between the Prime Minister and the President, is it entirely unique, or are there lessons to be learned here by other countries who are hoping for some resolution to the stalemate that they have between their countries and the United States?
Yeah, this president is particularly good at orchestration of the presidency, and he likes heads of state to come, be greeted at the White House, sit in the Oval Office, hear from the reporter questions, make statements. He drives a lot of press this way. It'll dominate our day, this kind of dialogue. And then, sit down and either one, like today, build a new relationship, or two, hammer out agreements, or at least create a process where there can be an agreement. And obviously, right now, trade is the number one issue, but it could be national security. It could be all kinds of different issues on a geopolitical basis. But President Trump really likes to orchestrate the presidency. I mean, remember, the first thing out of his mouth, hey, what do you think of my new decorations? 24 karat gold. Don't they look great? I mean, that's the opening gambit. in two heads of state from neighboring countries where there's been a lot of tension. So he likes the show. He puts on a good show. Sometimes it's a positive one, like today with Mark Carney, sort of repairing a new relationship with Canada. We don't need to have that kind of tension going on, especially during the Stanley Cup playoffs. But it can go the other way. And, Vladimir Zelensky experienced the downside to that meeting is if you don't pay attention, take the cues, like Mark Carney did today, then it could blow up in your face. I mean, Mark Carney had a moment there where he was about to interrupt, and you could see he barely talked, and then realized, whoops, I'm just going to retreat back into my seat and let the show continue.
He did have that great line about Canada not being for sale, saying, that President Trump appreciates real estate and knows real estate, and there are some properties in the world that are not for sale, decidedly not for sale. The White House, Buckingham Palace, and Canada, they're in that trifecta. I've been remiss in focusing so much on the White House and not on the goings-on Capitol Hill, so I want to turn there now because, of course, there's this race underway among Republicans on the Hill, on the House side in particular, to find some agreement here, move that reconciliation process forward. And we had a meeting of the Republican conference, this morning on Capitol Hill. And afterward, we heard from House Speaker Mike Johnson just on the status of those talks and the progress that's being made. Let's take a listen to what he had to say.
The intention was to work through some of the final details, but we realized that we were still awaiting some key numbers on calculations on some of the provisions with tax and some of the other details. And it just made sense for us to push pause for a week to make sure that we do this right. We didn't want to move this quickly, speed for the sake of speed. We want to get it right. And so everybody in the room agreed that it made sense for us to do that.
Rick Davis, I want your thoughts on Republican realism there, and I think we got a glimpse of that from the House Speaker. He's talked about Memorial Day being a target. We've heard Independence Day, July 4th being floated as well. As you look at the timetable, what makes sense to you as you kind of assess the progress that is or isn't being made among Republicans in Congress?
Yeah, in order to translate, get it right, what it really means to the American public is we don't have the votes. Otherwise, they would charge forward with these committees. This week, there were supposed to be markups in committees like agriculture to hammer out things related to programs like the SNAP program, how we feed people under the poverty line. And so the fact is that there's been enough members out publicly, you can count them just in the press, that they wouldn't have a vote that could pass any of these amendments. And some really intractable things like Jeannie's favorite tax, the SALT tax. There is not unanimity within a Republican caucus as to what to do with that or how to pay for it. It's not in the current marks. And so I think that's what he's talking about is we've got to figure out what that number is going to be and then maybe try to round up some votes between now and the 4th of July.
About that favorite tax of yours, or the SALT tax, Ginny, sort of how does the leadership of the Republicans in the House get his raucous caucus on board with this? In other words, you had that meeting this morning. It seems like there still isn't a lot of unanimity or agreement going forward here. Just give us a sense of sort of how formidable that challenge is and what it's going to be as you see it that would get all the Republicans in line to vote for this bill.
I like that descriptor, David, raucous caucus, because that really is an apt way to sort of encapsulate what is going on here. You've got these, groups in the Republican Party that are really drawing red lines. And one of them met last night, and that was the hardliners, the budget hawks, who are saying the GOP leadership, the Senate, they're not doing enough to address the deficit. And of course, we've heard from these folks all along. But then, as Rick mentioned, you have my favorite, the moderates from the SALT area, the SALT caucus, as we call them. They want that cap raised. They simply can't get reelected without it. Then you have the Medicaid defenders. So, you can go on and on. There's even the IRA people, the people who are saying, hey, wait a minute. We want the IRA protected. We know that was Joe Biden's work, but quite frankly, it helped our constituents. We can't vote to rob them of what they got out of the IRA. So how Mike Johnson threads this needle is the big question here. I don't know how he does it, but as he started off with an Easter deadline, Memorial Day, and now July 4th, it seems that he's hitting all the major holidays. So I'll go with Labor Day. I think what they'll get is probably the 2017 tax extension, but I am not convinced they get much more than that. But of course, if they don't, just look at the deficit hawks. What do they do then? They're not going to be happy. So I wouldn't like to be Mike Johnson right now. He's got a really, really hard uphill battle trying to get this done.
And I suppose a less celebrated or celebratory holiday is the X date, which we still don't know when that's going to happen here, but that could be a forcing mechanism as well for some action on Capitol Hill. And we heard the Treasury Secretary talk about that, speak about it, warn about it today, but he's not yet offering a definitive sense of when that X date is going to be. Rick, I'm going to take advantage of you being here to help me prep for an interview I have a little bit later today. I'm going to talk to the chair of the House Budget Committee, Jody Arrington, on Capitol Hill. What do you want to hear from him? Help me break a little news here as he kind of watches all of this unfold in other committees. What does he want to see get done? What does he need to do?
Yeah, obviously the biggest challenge that Chairman Arrington's got is to reconcile all these pieces, the Agriculture Committee, the Energy and Commerce, in order to get the cost cuts close to $2 trillion that the conservatives are demanding in order to pass this bill. That's the number one. But number two is he doesn't have a deal with his Senate counterpart, Lindsey Graham. They have less than $200 billion in cuts in their budget. Now, how you go from $2 trillion to $200 million is a very, very strange combination. And I'd say, how do you, I get that you can pass a bill. How do you actually reconcile it with the Senate?
Judy, you want to weigh in on this as well? Give me a little fodder here, a little grist for that interview. Sort of what are you most interested in as you kind of watch all of this unfold? And I should say that does seem to be the tack of Democrats here as these negotiations take place. They don't have a whole lot of power. They're not, shall we say, actively involved in these conversations or these negotiations.
That's right. Not a lot you can do when you are out of office. So you just get your popcorn, you sit back and you watch the fireworks. I think for Chairman Arrington, I think one of the big questions that I have is what are his red lines? You know, as it pertains to cutting the deficit, it's something that he has talked so vocally and so long about. You know, where is he going to be in terms of what is not enough? As obviously chairman, he's also got to deal with these caucuses I was just mentioning. How do you deal with those? And of course, the big question here, I think, from the Democratic perspective is if they do need to call on Democrats to raise the debt ceiling, which is something many Republicans haven't been willing to do, what are they willing to give away or negotiate on, if anything? So those are my big three, David. I can't wait to hear the interview. I know it's going to break a lot of news.
Thank you very much. Chita Chianzano, thank you very much for your time today. Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. My thanks to Rick Davis as well, partner at Stone Court Capital. Both of them, of course, Bloomberg Politics contributors, giving us some perspective here. What's happening on the one end of Pennsylvania Avenue at the White House as we have the president meeting with the Prime Minister of Canada behind closed doors, and what's been happening up on Capitol Hill as well as Republicans are tackling reconciliation and trying to get that big, beautiful bill into a form that they can vote on and try to pass for the President of the United States. Much more to come here on Bloomberg's Balance of Power. We're going to talk with a former ambassador, U.S. ambassador to Canada, about the relationship, the long-standing relationship between these two countries. That's coming up on Bloomberg Radio and Bloomberg Television.
It's 1:40 on Wall Street. I'm Amy Morris. The U.S. trade deficit hit a record $140.5 billion in March. That included the biggest ever rush on pharmaceuticals as companies hurried to get ahead of tariffs. We do check markets for you all day long at Bloomberg. The S&P 500 now down 0.8%. NASDAQ down 0.9%. The Dow also down 0.9%. The 10-year Treasury yield at 4.31% and the 2-year yield at 3.79%. The economy's downturn is starting to affect ultra-budget carriers as people who cannot afford to fly stop flying altogether. That's left mostly business travelers and loyalty points users. Discount carriers like Spirit and Frontier are struggling due to higher costs, competition from legacy carriers, and a fatigue factor among the flying public, leading them to shift toward fuller service cabins. Now, the original ultra-low-cost model is seen now as unsustainable. Spirit and Frontier evolving toward more consumer-friendly approaches, and legacy carriers are offering their own no-frills options. Friedrich Merz has succeeded in his bid to become the next German chancellor during his second vote in parliament. That's just hours after he suffered a historic defeat in the first round. The conservative leader had been expected to smoothly win the vote to become Germany's 10th chancellor since World War II. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That is a Bloomberg Business Flash. Let's go back now to Balance of Power with David Gura.
Amy, thank you very much. David Gura in for Joe Matthew and Kayleigh Lyons on this Tuesday as the President of the United States meets with the Prime Minister of Canada at the White House. A lot of uncertainty surrounding this meeting, but it got off on a good foot, I think you could say, in the Oval Office as those two leaders sat in front of the fireplace and fielded questions from reporters. And the President lavishing the Prime Minister with a lot of praise, calling him a good person, a talented person. Said he thought he was excellent during the course of the campaign and talking an awful lot about the longstanding friendship between the U.S. And Canada. That's where I want to go now with the former ambassador Bruce Heyman, former U.S. ambassador to Canada, spent about 4 years in Ottawa on behalf of the United States. Before that, he was a partner at Goldman Sachs, which is where I should say Mark Carney spent a good chunk of his career as well. He joins us from the global conference that the Milken Institute is convening out in Beverly Hills, California. I know you were busy with all of the goings-on there out in California. Probably didn't get to watch those comments, but I look at what you posted on X yesterday. You wrote, "Big day tomorrow for Canada-USA relations." Ambassador Heyman, help us understand the importance of this moment and what you hope will come out of this meeting taking place between President Trump and Prime Minister Carney.
So thank you very much, and it's a pleasure to be with you today. There is no more important relationship that the United States has than with Canada. It is our best trading partner. Yes, it is, regardless of what you hear. It's our ally. It's our neighbor to the north. And Canada has always been there for us in our time of need, in our darkest hours, 9/11, Iran hostage crisis, storms. We just saw it recently in California where they sent the water carriers in to pour water over the fires in Southern California. Look, Canada's always been there for us, and I think what's happened over this last 110 days has been jarring, unsettling, and upsetting to Canadians, and rightfully so. I think today's meeting is a beginning of a reset moment. I would say beginning, but I would say everybody was watching. The body language, the handshake at the beginning, the Oval Office, where I've been in that Oval Office with Prime Minister Trudeau and President Obama. I know the context of it, and I know the feel of the room. It actually felt pretty good watching the clips here this morning. Now, we will have more details as the day goes on, but I think this is a beginning of a reset moment, and I think it's an important one for our bilateral relationship.
And I'm going to pick up on your metaphor of using natural disasters here. Over the course of the presidential campaign here in the U.S., you were fond of issuing a tsunami warning, indicating that if President Trump were to win, this could be, as I think you put it in an interview with Politico Pro, super bad, potentially super bad. When you think back on what you were warning about then and indeed what has come to pass since then, was the super bad assessment merited? Is this as bad as you thought it might be in terms of how the relationship between these two countries has worsened in recent days?
Actually, it was a bit worse than I had expected. I did not anticipate a proposed cross-the-board 25% tariff, nor the language of the 51st state, which I think was wholly inappropriate. all of that was completely jarring for the Canadians, and being as upset as they are, look, you guys know this. The flights booked over the next several months from Canada on a pleasure basis or social basis to the U.S. are down 75%. The purchasing of American goods is not happening, whether it's in liquor stores, grocery stores, or otherwise. I mean, people are upset in Canada, and I think we need to find a pathway to fix this, and I think this is a good day to start.
I should say I just flew back from Montreal, and the airport, the terminal in which flights from Canada to the U.S. originate, much emptier than I've seen in the past. And to your point about liquor store shelves, I went out to dinner. There was a kind of a fire sale on Californian wine. They were trying to get rid of it, which was to my benefit while I was there. Let me ask you sort of what you hope to come out of this conversation. So I think that the broad line that we got from the president and the prime minister is, look, there is a friendship between these two countries. Talks are going to go well. They're not going to talk about sovereignty over the course of their meeting at the White House today. What to you would constitute a success? So we've seen the kind of good, very evident visuals that these two men are seemingly getting along well. What tangibly would you like to see or hear about when these meetings conclude?
So I do not anticipate an agreement being waved in the air. That should not be anticipated. And I do not anticipate that all things will be healed. We heard that even in the early conversations with regard to President still wanting tariffs and the back and forth that's going on. But we need a framework in which the two countries can sit down with respective sides behind closed doors and sit down and discuss a path forward and work on a constructive give and take. And let's get this bilateral trading agreement fixed and updated and in an expeditious way. You know, USMCA, which was the president's agreement, is up for review next year. And so why wait till all the way through to next year to review that? In my opinion, that review should begin post-haste. And we should sit down and figure this out so that we can get an agreement that everybody's comfortable with. So business leaders here at the Milken Institute and throughout the United States can get comfortable investing in Canada, which they should be. I think it's an amazing investment opportunity to be investing in Canada today. And I am encouraging people. I also think it's an incredible opportunity to go visit Canada. And, you know, what a beautiful country. And if you want to have an international travel experience and take your family or friends, go to Canada. I think you'll really have a wonderful time.
Bruce Heyman, I want to ask you lastly for your perspective or insight into who Mark Carney is. As I mentioned, a colleague of yours at Goldman Sachs, somebody that I know you've observed when he was in his role as a kind of technocratic personality in Canada, running the Bank of Canada, and then, of course, running the Bank of England as well. He's a political novice, something he touted often when he was on the campaign trail. Just give us some insight here into how he approaches thorny issues like this one, this seemingly intractable one, sort of what you're going to be watching for, what we should be paying attention for in terms of how he kind of comports himself and approaches this job.
So everybody should know this is a serious person. He is smart. He is well educated from Harvard to Oxford. He has had incredible jobs leading the Bank of Canada during a financial crisis, leading the Bank of England during Brexit. He sat on some of the most significant boards from Bloomberg to Brookfield. He is a seriously smart and effective and experienced person. To sit at this moment is an important moment because that's what we're talking about: global trade, tariffs, economy. So he comes in with a great deal of competency. He also has a sense of humor, and he also, you know, has a love of music, and he is a balanced, wonderful person. I think this is a good leader for Canada at this moment, and I think the Canadians are going to be proud of what he does in these meetings with Donald Trump, which are not easy. We've seen many leaders come in and out of that Oval Office and have very different experiences, and I think this is at least setting up to be a very good one for the Canada-U.S. relationship.
Bruce Heyman, thank you very much. He was, for about 4 years, our man in Ottawa. He joined us from the Milken Institute's Global Conference in Beverly Hills, California. Very grateful for his time on this Tuesday as that meeting between the President of the United States and the Prime Minister of Canada wraps up. Over on Capitol Hill, U.S. Treasury Secretary Scott Bessent was testifying today before a House panel on all manner of issues, and something he talked about over the course of that testimony was the so-called X date, when the U.S. is going to hit its borrowing limit. Let's hear what he had to say about that.
We will share with Congress when we believe we are approximating that date, so that will be forthcoming. But I will tell you, just as an outfielder running for a fly ball, we are on the warning track. And when you're on the warning track, it means the wall's not far away.
The wall is not far away. For some more insight into this, I want to bring in Dan Flatley. He covers the Treasury Department and Secretary Bessent for us here at Bloomberg News. Dan, great to see you in person. There is a hunger on Capitol Hill, especially among Republicans, as negotiations over that big, beautiful bill continue, for what that X date is, what it's going to be. What is your sense, yes, from the testimony we heard today, but from your reporting of, A, when we're going to get insight into that, and sort of where on the calendar it might fall?
Yeah, David, it's a great question, and actually it was a Republican who asked Secretary Bessent this question in the hearing today, and he sort of disappointed us all by saying, you know, we don't have that yet, or we're not prepared to share that. Although he had a very interesting comparison to an outfielder running for the fly ball, as we heard there. I think that he has said in the past, and Treasury has said sometime in the first half of May. So obviously we're in that window right now. Why this matters is because Congress, as you well know, David, needs a deadline in order to get anything done. And the X date really is like the deadline of deadlines, because Bessent, later on in his testimony, made a point of saying the U.S. will not default on its debt, will not breach the debt ceiling, ultimately will pay its obligations, and that is what you'd expect him to say, but still a very important thing for him to say. And so when you're talking about the tax bill that the Republicans are working on, when you're talking about revenue from tariffs that they're looking at, when you're talking about all of the things that are happening with the economy, it really kind of comes down to that, what we call the X date. So we didn't get it today. We may get it any day now, really. And so we're all sort of on tenterhooks waiting. And so, you know, he's keeping us in suspense.
You know, we had Nathan Dean on a little earlier, and he referred to Scott Bessent as the calmer in chief. That's the role that he's playing in this administration. We certainly saw that on display in California yesterday when he talked to global investors. Was it the same Scott Bessent in that hearing room today? Sir, what's the role as you see it that he's playing as he kind of communicates this president's, yes, economic vision, but also sort of gives a status update on the president's economic agenda?
Yeah, it's a good question. I think it was during his confirmation hearing, one of the senators remarked to him that he must have a pulse rate of about 40 beats per minute. So he does kind of project this very calm, cool, collected affect. At times, I think that caught some members off guard. They wanted him to be maybe a little bit more animated. When you heard some of the questioning from Democrats, they wanted him to answer some of their questions and wanted him to do it quickly. And so, you know, he uses kind of that, you know, that demeanor to his advantage in those types of scenarios. But certainly he has kind of played this role of calming the markets. We did see stocks pare some of their losses after he spoke on trade. He mentioned that he thinks that 80 to 90% of the trade deals that they're sort of actively working on could be negotiated by the end of the year. We're hearing different timelines, obviously, on these trade deals, and we haven't yet seen one materialize. And then, of course, President Trump came out later and said that, you know, he's going to negotiate these deals on his own terms, and he's not looking at lowering tariff rates necessarily. So maybe some good cop, bad cop, maybe some of a calming force, somewhat of a more energetic, some might say chaotic force. You know, that certainly seems to be part of the strategic uncertainty, to use a phrase that Secretary Bessent used today, to try to bring some of these deals over the finish line. But I think that he played his role relatively well today in terms of answering questions before the House Appropriations Committee. Tomorrow he'll go before the House Financial Services Committee, much bigger panel, a little bit more raucous in terms of the questions that he's expected to get. And so we may see him pressed on some of these issues a little bit more than he was today.
Very quickly, just about 30 seconds. We've talked about his role with investors on Capitol Hill. How about in these trade talks themselves? What's his remit, or what is he focusing on?
Well, it's interesting. I mean, he kind of inserted himself really into the middle of a lot of these trade talks, including with Japan, which he has a history with as an investor. He's now kind of
taking a little bit of a step back. He was asked the other day, saying the U.S. trade representative is handling a little bit more of the details and stuff like that. But the officials from Japan were at Treasury last week, so he's still very much involved, for sure.
Very much involved, for sure. We'll look forward to your coverage of the hearing tomorrow. Dan Flatley, thank you very much. Dan Flatley covers the Treasury Department for us here at Bloomberg News, and we did hear from the Treasury Secretary about the status of those talks between the U.S. and China. He indicated those negotiations are not underway, and that was certainly a question that was asked of the president during that prelude to the meeting that he's having with Prime Minister Mark Carney, and the president of the United States saying no negotiations have taken place, but they do want to meet. China does want to meet with the U.S. Continuing to follow those meetings at the White House, Prime Minister Mark Carney is scheduled to hold a press conference of his own a little later this afternoon, bringing you coverage of that as the afternoon unfolds here on Bloomberg Television and Bloomberg Radio. David Gura in for Kaylee Lyons and Joe Matthew here on Balance of Power on Bloomberg.
The top names in business are on Bloomberg.
The policy actions to date have raised the level of uncertainty to a degree that I don't think is healthy for investment and growth. It's going to be important that we get more clarity on the direction of travel from here. As I'm talking to CEOs, as I'm talking to our clients, they are holding back on investment, and they're certainly tightening their belt. You're going to see some companies laying off employees and running their businesses tighter because of this level of uncertainty.
Nobody covers business like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to day 2 of our special coverage here on Bloomberg from the 28th annual Milken Global Conference here in Beverly Hills, California. Live
It's a little
from the Beverly
quieter.
Hilton. A little quieter here today, but of course things will start to pick up. Just 11 a.m. Here in Los Angeles. Almost lunchtime, Carol.
Almost lunchtime. I kind of lost concept of the time. There's so much going on.
We're going to be here for the next 3 hours. Of course, a mashup of your two favorite shows, Bloomberg Business Week and The Close, and a lot of great guests once again over the next few hours.
Yeah, looking forward to kind of getting a feel. I feel like in terms of the investment environment, so many years it's been all about private credit. We've talked about that so much. What's interesting is the word that is most often, I think, being used is tariffs. Over and over. But I don't think you're necessarily hearing President Trump's name identified with it. Like we talk about tariffs as a concept, but not necessarily tying it to the administration. Are you not feeling?
Well, I went to better cocktail parties than you. We were talking about, arts and entertainment.
He's the man that goes everywhere.
But all right, let's get down to it here. We got a long lineup today. You want to go through some of the names we're going to talk to,
Let's go, because we're going to get conversations that really span the world of business. Let's go through some of the names. A broad markets and credit conversation and special situations expert Victor Khosla is back with us, Strategic Value Partners founder and Chief Investment Officer. Folks, we're also going to sit down with Eric Martel, CEO of Bombardier, to discuss the future of aviation. I can't wait to talk to him. He also understands global supply chains. We're going to also touch on where you should look for investment opportunities with Manny Roman. He's the CEO over at PIMCO. Talk about a firm that also sees so much. So some great perspectives over the next 3 hours.
Yeah, just three of the great guests that we're going to have over the next 3 hours. And we start off with the fourth. Ida Liu joins us now to kick us off. She's global wealth management expert who for years led the part of Citigroup that catered to the wealthiest of the wealthy clients, a group of clients globally who are increasingly looking for a little bit more help in connecting the dots between their investments, taxes, legacy planning, all in an increasingly tumultuous world. Ida, great to see you.
Thank you. It's so great to be on with you both.
No better person to talk to about managing personal money at a time when I would think things are a little bit harder. I mean, it's not just tariffs, economic conditions, but you've now got to navigate changes in tax policies, changes in geopolitical leadership. I mean, how do you do that, particularly for clients that we know are very demanding?
So it's interesting because investors, I would say, are cautiously optimistic. They've been a bit wary because of all of the volatility in the marketplace, but they're ready. So you've been seeing them buying into the dips and still investing in some pretty interesting opportunities to reposition portfolios for the long term. And there's still some very compelling opportunities out there.
Look at the opportunities out there. We've talked a lot in Milken, obviously, about the competition and in some cases the collaboration between public and private markets. When you talk about allocating to a personal portfolio, I know that high net worth individuals have embraced alternative assets, real assets a long time ago. But are you seeing an increase in those allocations?
Oh, absolutely. So alternatives still are a key part of investor portfolios, and you're seeing a more heightened interest in alternatives, particularly in the secondary market. So you're seeing secondary demand pick up pretty significantly because of the marks to net asset value and the discounted net asset values that you can get there. But in addition to that, the demand for direct and co-investment is still there and is still very strong.
I do wonder too, Ida, I kidded at the top, but the word that seems on everybody's mind is tariffs and the implications it has for our global economy going forward, for our investment environment going forward. How do you kind of roll that into some of the conversations that we should be having when it comes to your portfolio?
So it's interesting because on the top of every investor's mind is what's happening geopolitically, what's happening with the tariffs. We're effectively in a trade war with U.S.-China. But what happens is that because of the changing supply chain demands around the world, there's unique opportunities as well. So investors are looking at how do I reposition geographically some of my assets to take advantage of Japan, India, Southeast Asia, other countries in the world that are ripe for more growth in the near future.
Said and done, and we figure out the president today having a press conference with the Prime Minister of Canada, Mark Carney. They did talk about global supply chains. They talked about kind of the global North American corridor when it comes to supply chains. Do you think net-net, when everything is done, supply chains, the reordering will actually be a net positive for investors and investment plays? And how long does it take for us to get there?
I definitely think that you're going to see some net positives because of the changing dynamics and the different regional investment opportunities. I think we've seen the domestic markets outperform the last couple of years, some of the international emerging markets, and you're seeing that flipped on its head now, right? With the S&P up, only down 3% this year to date on the back of
quite a ride.
Yeah, on the back of to 25% mid returns in the last couple of years. So I think this repositioning, you're seeing some strength in Europe, already year to date, is going to be pretty attractive for investors in the long term.
Let's talk about broad investment themes, and partly to Carol's point about tariffs and all of the chaos kind of created by trade policy in Washington. Has that upended more of those long-term thematic type investments like AI, like renewable energy, et cetera?
So it's interesting because there are three areas that continue to be on the top of investors' minds. It's AI, it's clean energy, and it's healthcare and longevity. And it happens to be three of the topics that we're talking a lot about at the Milken Conference over the next several days. On the AI side, it's not just about investing in the software, it's also investing in the parallel industries like semiconductors that are the brains behind the AI growth, and then thinking about how clean energy is going to play into all of this, because with the growth of AI, it's going to need an exponential amount of energy, and there's some very promising clean energy investment opportunities, for example, with fusion, that could really transform the way that the world is thinking about energy and energy sources. And then the last thing I would say is on the healthcare and longevity side.
I love that you brought that up because I feel like Milken, I think one of the first panels I did pre-COVID was on longevity. Right. And it just feels like they have been talking about this for years. Where are we in that kind of conversation, especially from the investment side of things?
Yes. So a third of the world's population is over the age of 65, so we're still going to have a massive consumption story going on there. But in addition to that, we have so much advancement in healthcare, the drug discovery, the telemedicine, the personalized medicine. I mean, the next generation is going to live 10, 20 years longer than any of us, and that has pretty serious implications on your investments portfolio as well.
Are you thinking about retirement?
No, I wish. But I think my duration in retirement is going to be shorter, so I have a little more wiggle room. But that's a great point because, that changes the dynamics, right? If you're talking about average lifespan of 70 to 80 years old, and that goes up, even 10 years, that changes the dynamics of, I guess, how much risk you can take on, maybe even later in life?
Absolutely, Romaine, and it's not going to be uncommon for people to have life expectancies of over 100 years old. So that's definitely coming as well.
So when we get to this idea of the broader theme, so you say AI, energy, health and longevity, there's been a lot of talk here, particularly among some of the people from the Trump administration, about the U.S. leading in those areas. As you know, there's a lot of competition from China, maybe to a smaller extent Europe, and who knows where the next sort of big new industries will crop up in what parts of the world. Do you look for that now geographically as you try to sort of advise people kind of where the puck is going, so to speak?
Absolutely, and yes, you're correct. There's so much being spent R&D on AI and technology in the U.S., but very closely behind that is China. And they're growing very quickly, particularly as it comes to robotics and solar and some of the other energy sectors as well there. So we keep a close eye on the development, and we try to invest not only in early stage, but for the full spectrum as well, right? So early stage direct investment opportunities, alternatives, and then playing some in the public equities as well.
I think what's interesting is I think the vice president has been to India. We hear a lot about some kind of trade agreement. The president mentioned it even today between the U.S. and India. We're going to talk with John Chambers a little bit later about the importance of India and certainly supply chains. Where do you see the U.S.-India relationship going? Does that kind of replace in some ways the U.S.-China relationship that we've had, especially when it comes to trade?
You're definitely going to see elements of that. You're seeing, obviously, all of the ongoing trade discussions as we speak and the tariff discussions as we speak. We've recently seen some willingness for more open discussion between the U.S. and China, so I'm hopefully cautiously optimistic on that, too. Fingers crossed. But, yes, we're keeping our eyes on the countries that will benefit the most from the U.S.-China bifurcation, and that is going to be India. It's going to be Southeast Asia. It's going to be, in part, also Japan.
All right, Ida, always great to catch up with you. Great to see you again.
Wonderful to see you both, too. Thank you so much for having me.
Absolutely. Well, what a way to kick off the show with Ida Liu, global wealth management expert, here on a day where, of course, we focus on private markets, public markets, and the intersection of everything in between. Did you know there was a Fed meeting today?
I was just going to say, I'm so glad you went there because all of it, public-private markets, is going to depend on what we get from the Fed. We don't expect them to do anything in terms of rates, but their commentary, always crucial.
We should point out yields in the Treasury space are down. Stocks down as well for a second straight day. Let's toss it back to Bonnie Quinn in New York, who's keeping a closer eye on what's going on in the markets.
Exactly. You said it, Ed Yardeni, saying waiting for nothing, essentially, when it comes to the FOMC this week. Nevertheless, we will be looking for how those statements differ from the last FOMC meeting. Equities lower. We're close to our lows of the session, with the S&P 500 down 0.75%. The NASDAQ 100 down more than 0.9%, so a second day of declines. As regards any kind of catalyst today, we're looking for anything on trade. No breakthroughs so far. President Trump saying earlier he would prescribe tariff levels and trade concessions for partners. This obviously assuming that there is no negotiations of any worth actually ongoing right now. We also have the dollar index on the decline, down about 0.5% versus its major trade-weighted partners. Crude oil is up, though. We're still in the $59 a barrel range, but that's up 3.8%. And that's one of the areas in the S&P 500 that you are seeing gains. In fact, it's about the only one at the moment, utilities and energy, the two sectors in the S&P that are higher. Healthcare performing the worst, down 2.7%. Industrials down 1%. Really nothing great to speak of. We're awaiting earnings after the close. We might get some kind of an idea of how AI spending and CapEx plans are going throughout the year, with AMD reporting after the bell. ARM obviously giving its earnings post-market tomorrow, so we'll have a little bit more of an outlook on the impact of the Trump tariffs on chip sales, and that might help us look towards NVIDIA's earnings at the end of the month. But as regards markets, we also are seeing yields lower today. We did get a strong 10-year auction, which heartened some parts of the market, but the yield curve lower across the curve, with the 2-year yield down about 4 basis points. The 10-year yield right now down about 2.5 basis points. Bitcoin holding its own. It's up about $300, still trading in the $94,500 a coin category. Gold is higher as well today. That'll tell you a little bit about what you need to know about this market. Up to 3,412 per ounce. And with that said, the VIX is also trading around 25. So just a little bit more elevated than it has been. In terms of those currencies, I do want to point out some strength in the Canada dollar and also the Mexican peso. As Trump said, the USMCA continues to be very effective. Now back to the Milken Institute Global Conference in Beverly Hills and Romaine Bostick.
As we continue our special coverage, I mean, we should point out, Carol, there are dozens, maybe hundreds of panels that take place here at Milken over roughly 4 days straight. Yeah, all at the same time, all at 10 a.m. You got to get here on that. But I had a chance to host one yesterday, which was actually at a more favorable hour, about 3 p.m. And it was on the future of venture capital, kind of a focus on AI, on IPOs and tech. And one of the folks who was on that panel, his name is Raj Ganguly. He's the co-founder and co-CEO at Wardle Saverin's B Capital. And pleased to say he joins us right here on the Milken stage. Great to see you again, Raj.
Great to see you.
We had a great conversation today, and I want to kind of build on that and build on something that our previous guest, Ida Liu, pointed out about how a lot of investors now, they want to ride with companies from the early stage all the way up to when they're public. In the VC space, I've seen a lot more, I guess, creative options when it comes to the investment model, the stage at which you get involved, and how long you stay with those companies. How is that evolving?
I think venture capital is an industry that was built on change, and we're going through a profound period of change in our industry. Private companies have the ability to stay private much longer now. They don't have to IPO after 5 years. Companies like Meta IPO'd after 8 years. We're getting to a stage where you can be private for 10 plus years. And the onus is on us as venture capitalists to build bigger, better companies that when they do IPO, they're resilient companies that can really hold up in the public markets. And you're seeing so many venture capital firms becoming SEC-registered investment advisors so they could really hang on to the investments that they have for a longer period of time.
I've seen this trend, and there's been a lot of hay made of that. And there are some companies that have done that for a while. Andreessen, of course, became an advisor years ago. But you're seeing more of the VC funds do that. What do they become then? Do I stop calling you a VC fund? Because
you can still call us a VC firm, but I think the lines between venture capital, private equity growth, and even venture credit are really blurring. Ultimately, we built B Capital to be a firm that serves the best founders. And what we know, because we ourselves were founders, is when you're early on, you need certain types of help. And as the company scales and grows, you need different type of help. We believe that we can be that right partner from the early stages all the way through the late stages. And the types of capital you need are different, from very seed stage, early capital, to larger amounts of capital that are more sustainable. And that time horizon that a lot of venture capital firms have, saying that, oh, we need our money back in this number of years, that doesn't work for every founder anymore. So we need to adapt to what founders need.
But I'm curious about this, because when I think about fundraisers and supporting, especially startups, Raj, what does that mean? Is it really, really early stage, it's going to be venture, and then as the company gets larger, it's going to be more like private credit? Like, because all of those are kind of, you're in for a longer duration than most investments.
Yeah, it's a great question. I think we're all trying to figure that out right now, which is, where does venture capital stop? Where does private equity growth begin?
Where you make the most money?
Well, listen,
Is it that simple?
It is important for our investors that we drive returns, but the way we drive returns in our business is by partnering and backing great founders and helping them scale and grow. We're not in the business of buying companies that are not performing well and turning them around. Our business is investing in fundamentally high growth businesses and hopefully helping them grow even faster. And sometimes that growth comes from venture capital firms, but sometimes that backing comes from other types of firms. So I think in the next 10 years, you're going to see fundamentally the lines between these different types of firms really blur.
Can Romain and I eventually get a piece of that? Like, how is that moving in terms of the democratization of that?
It's a great topic, the democratization of private capital investing. I think the next decade, you're going to see that public market investing doesn't provide the same kind of return that it has for the last couple of decades. Private market investing has been really this area that elite endowments and other people can only do. We need that to change. We built our firm on the back of a lot of great public pensions. We've taken capital from people that a lot of venture capital firms haven't taken capital from before. We think democratizing this industry is backing founders that have come from different types of universities, that have come from different kind of backgrounds, maybe not even gone to university.
Right.
And it also means taking capital from folks that might not be the folks who helped build this industry in the first place.
Well, that's what I'm curious about. Where does the new capital come from? I saw, if I remember, and correct me if I'm wrong, you just recently opened an office in Doha.
We did.
There's been obviously a big push to get more money coming out of the Middle East, which is looking for a home. Is that the next fuel for the venture capital community?
It's a great question. I mean, we continue to be, our biggest backers are U.S. public pensions. We think that people who are pensioners deserve access to the best private capital investments. They remain some of our biggest backers. We actually have opened in the Middle East because as we've been redoing our strategy in Asia, we think that the Middle East is a really exciting place with a high number of really talented young engineers, a very youthful population, and our belief at B Capital is you can build global businesses from anywhere. We remain about 80% invested in the U.S. We think that Silicon Valley is, with generative AI, what's happening in healthcare is still the best place to invest. But
Wait,
we do invest
did I hear
outside.
premier destination for global investors, the United States? Is that what you said?
Absolutely, and it's always been our belief, and even when we're investing in companies outside the U.S., most of those companies are targeting the U.S. market to grow in. The U.S. market remains the #1 dominant market in tech and innovation.
Still, I'm kind of surprised to hear that, because I think there's been some questions.
All right, Carol, you would have learned all this if you had come to my panel yesterday. Raj, great to have you.
Thank you.
Absolutely. Raj Ganguly, co-founder and co-CEO.
Great stuff. Thank you.
Capital. All right, as we drumbeat to the closing bells, let's toss it back to New York and Bonnie Quinn. Bonnie?
Yeah, Romain, a second day of declines now after we saw equities really run back up last week. It's reversing today, and that is that the S&P 500 down 0.7%. Most sectors in the S&P lower, with the exception of utilities and oil companies. For the most part, WTI crude trading at 59.26. It's up 3.75%. But the picture is pretty grim across the board. The VIX now is trading at around 25. Yields lower too. We have the 10-year yield at 431.99. That's down more than 2 basis points. The 2-year yield down almost 4 basis points at 379.51. This market is waiting for nothing, according to Ed Yardeni. Well, he's referring specifically to the FOMC statement and press conference tomorrow. Michael Feroli of JP Morgan Chase saying the main message from that is that the committee will be well positioned to wait for greater clarity before making any changes to policy. What kind of clarity? Well, doesn't look like we're going to get it from President Trump, at least not immediately. He's saying today he would prescribe tariff levels and trade concessions for partners looking to avoid higher duties. So he seems to be moving away from the idea that he's going to be engaging in back and forth negotiations. That's all we really heard from him so far today, although he did say that the USMCA is very effective and if he doesn't know if it's necessary to renegotiate that trade deal. That's helping the Canadian dollar and the Mexican peso today, but the US dollar is still lower by about 0.5%. Now back to the Milken Institute Global Conference in Beverly Hills, California, and Carol Masser. Carol.
All right, Bonnie, thank you so much. I do want to turn back to the markets, and more specifically, what's going on in the world of ETFs. Always a lot going on. It's a space that has significantly changed in the last few years, especially since the introduction of Bitcoin funds. Let's get more ahead of a panel that he's going to be on. He's going to be talking about that dynamic in particular. John Cardunas, he's president and CEO of Calmos, and he joins us here at Milken. So nice to have you here. How are you?
Great. Nice to be here. Thank you.
It does feel like crypto is having its moment. Thank you, White House and President Trump. Would you agree with that?
It definitely is in the news every day, and there's new things that are happening, and this administration is very pro-crypto, and the world is changing, and they want to try to get ahead of it, and I'm not sure that they're wrong. I think that we should get ahead of it, because if we don't, other countries will, and they will take advantage of it.
So then what do you see in terms of how it plays out in the ETF space specifically, the growth that you expect, and how do we make sure investors really understand potentially the risk in this world?
It's the last 15 years, Bitcoin has been the best performing asset class in the world. There's no arguing that. Having said that, it's also been one of the most volatile ones.
Right.
And a lot of people have lost a lot of money. So people have to be careful when they invest, and it's more of a long term. Now, with the ETF market and the inception of the indices, like the Chicago Board of Exchange indices, there was able to do options where you can buy different types of ETFs on Bitcoin, like the ones that we are issuing, that can limit your risk. Calmos has been a risk manager since inception almost 50 years ago. We're great risk managers. We're a great options house through our convertible heritage, which we're the largest convertible buyer in the country. And we've developed 100% protected ETF on Bitcoin. And if you hold it for a year, you get a certain cap rate in terms of how much of the upside, but you won't lose any money. So we feel, and we're seeing a lot of interest, that it's going to increase the amount of people that are going to enter the ecosystem of Bitcoin. Because the more people that understand it, the more people that right now, we have about 80 million people in the United States that are participating in Bitcoin. There's room to grow, and the numbers on a percentage basis is much lower in the world. So the more people that understand it, the more people that can get comfortable, and the more people can play in it, participate in the upside in a risk-managed way, the more we grow the ecosystem, and Bitcoin could be more readily adopted.
The people who are adopting it, particularly through ETFs like yours, are they doing it for growth, as a growth asset, or more as a hedge, or what?
I mean, they're doing it for very different ways. There's a lot of people that are doing different types of Bitcoin, and they're levered, they're not levered, and so people need to be careful and read and understand what they're buying, because it's not all risk managed, as well as it could be. So we have products that you can turn the risk up or down, 100% protected, 90% protected, 80% protected, and you get higher cap rates from 11.5, 30 to over 50% of the upside, and you limit your downside, where other ones don't necessarily do that. So you have to be very careful.
Well, I am curious about other ways that people can sort of manage risk. I mean, this is probably a great environment for a company like yours, because everybody is focused on risk in a way that maybe they weren't a few years ago. And you talk about the heritage and convertible bonds, which for years was kind of one of the go-to places to sort of hedge downsides. What else is out there? What are people utilizing to protect themselves from this unknown that we seem to be in?
Well, there's a lot of volatility because of the uncertainty, of what's happening here with tariffs and everything else in the markets, right? So one way a lot of people have been able to manage risk is buying funds like our Market Neutral, which is one of the largest funds in the world in liquid alternatives. And what it does is it hampers it mutes the volatility in the market. And if the markets are up, the markets are down, it particularly gives you a return that is pretty steady either way. It's not crazy returns, but there'll be money markets. It's typically SOFR plus 300, 350 in an up or down market. And it's a 35-year-old fund that has performed incredibly throughout the entire time, and it's steadfast. So people can look at the history and say, hey, during all these cycles, this fund, no matter what the market's done, has kind of hung in there, and they use it as a fixed income alternative.
John, just quickly, just got about 30 seconds here. I mean, you mentioned earlier about the crypto play, no downside, but I am curious then, how much are you limited on the upside as a result?
Sure.
And are you not going to really, as you say, best performing asset class, but then how much are you limited in terms of how you are getting to enjoy that upside?
That's a great question. Like for our first run, you had 11.65% of the upside. So if Bitcoin goes up 20% for the year, you only get 11.65.
Yeah.
If it goes 5%, you get the whole 5%. If it goes down, you don't lose any money as long as you hold it for the year. And it rolls over, which gives it a nice capital gains versus income. So it's a great product that a lot of even elderly people who can't risk their capital,
right,
want to participate because they're hearing so much about it.
Yeah.
And frankly, if to get that kind of return is not a bad number if you're pretty confident that Bitcoin in the long run will go up.
As long as you know what you're investing in.
Absolutely.
John, we got to leave it there. John Kudonis, he's president and CEO of Calamos Investments. All right, folks, you are listening and watching live coverage of the Milken Global Conference. We're here in Beverly Hills. They're looking for this guy. Coming up, we're going to talk about opportunities in India. That's next. This is Bloomberg.
India.
You can have a baby anywhere you want. It's the environment and that care. That is what matters most.
Our investigation found some of the worst cases of harm were surfacing.
मुझे क्या पता कि भाला के चक्कर में मेरा ये बुरा हो जाएगा.
I never thought I would be vulnerable to a scam. This ruined me, and I didn't have any real good explanation for it.
Wildlife trafficking is almost always driven by greed.
Once you start focusing on money, you lose sight of what is best. That's where things go wrong.
The top names at the Fed are on Bloomberg.
I'm not going to overreact to any increase in inflation that I think is attributable to the tariffs. But if I see a significant drop in the labor market, then I'd be ready to go. I wouldn't be sitting here waiting to determine whether the inflation is transitory or not. It's time to worry about the real side of the economy. I would expect more rate cuts and sooner once I start seeing some serious deterioration in the labor market.
Nobody covers the Fed like Bloomberg.
What's the best thing and what's the worst thing about trying to put money to work in this market?
Technically, we're an endowment, but we use the best of the endowment model and the hedge fund model so we can react very quickly. And I think we're very good, I would argue probably one of the best in the world at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes. And I continue to like that trade, so we're holding that position. And again, when you see kind of the micro and macroeconomic data coming out of the U.S. and you see the data in China, I think you will see a tactical deal out of economic necessity between China and the U.S. And I think when you look at investors generally, they've left China for dead. So I think there's going to be money forced into that market.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
Welcome back to our live coverage of the Milken Global Investment Conference. I'm Carol Masser, along with Romaine Bostic. Some great coverage still coming your way. Now, at the beginning of the year, Bloomberg reported on how the power struggle between distressed company owners and their creditors that dominated last year, 2024, will only intensify this year amid the growing use and often criticism of cooperation agreements that bind debt holders to act together. Now, back with us here at Milken is Victor Khosla. He's the founder and chief investment officer of Strategic Value Partners. It's a global alternative investment firm focusing on distressed and deep value opportunities. Victor, it's so great to be talking with you. And I feel like people are saying this has been an environment where you can find maybe an increasing number of distressed opportunities. How do you see it? How do you, especially the last month amid the volatility and uncertainty?
Carol, for us, we were really busy last year. And last year with these hot equity markets, you would not expect us to be busy, right?
Yeah.
So we were really busy last year, and if anything, the pipeline for us, it has really turbocharged over the last couple of months. Would it help if I described even the setup from last year?
Yeah. Well, can I tell you something? I went and got my notes from our conversation last year. You said the world economy will be a bog next year, meaning this year. You believe that we're going to wake up 18 months from now, whether we've had a full-blown recession or soft landing, it's just a slog. Low GDP growth, higher rates, maturity wall, and higher defaults. And you also talked about the opportunity in Europe. So hands down, because you called it, I was like blown away. So go ahead. Pull out your crystal ball and tell me where we go next.
Thank you for the advertisement.
Well, it's the truth. It's the truth.
But you know, what happened last year was we have, you know, if you're a private equity fund manager, you ran into COVID, then you ran into the Fed raising rates, and now you've run into a whole new administration with a whole new set of policies. So you've not been able to realize, you've not been able to monetize at the pace you wanted to. And if you're a private equity manager, you do these amend and extends. You were starting to talk about that earlier, and the total amount of debt keeps climbing. Every time you do an A&E, the debt on it gets bigger and bigger. The debt has to pay higher interest rates. So even last year, in that strong economy, you had 5% default rates. Now, what's happened in 2025, look, we don't know if you're going to get a recession or not in the United States. Don't know. The U.S. economy is extraordinarily resilient. It can take a lot, right? But clearly, you have a slowdown. Clearly, you have higher rates. And that 5% default rate, our view, recession or no recession, you've got multi-years now where we are going to be restructuring and working through these historical portfolios.
Can you give us an example, though, of kind of what's the cushion? Like, oh, so at 5% now, I mean, if that goes up 2 or 3 percentage points, does that mean some of these companies are basically, they're just not going to have the cash flow to service that, or is it a wider gap?
the real issue with a lot of these is, you know, Romain, what I was talking about, the total debt continuing to climb. So if you raised $1 billion of debt to do a leverage buyout, when short-term interest rates were zero, now that $1 billion of debt with the A&Es has become 1.2 and 1.3 billion, and the 0% is 4% risk-free. You're really paying more like 8 or 9 or 10%. Ooh, you got a problem. It's really, it's just mad.
So you're trying to capitalize. Can you quantify? I mean, how much money have you really put behind this in terms of chasing new opportunities as you're starting to see some of these companies struggle, for lack of a better phrase?
You know, the first thing, all of us have portfolios, Romain, right? The first thing when you see a sea change like this, it is a sea change, you ask yourself, hey, how good is my portfolio? Do I have it really battened down, right, at a moment in time like that? And then we have a good portfolio.
Okay, all right.
The second
noted.
Thing, right,
we'll put that at the bottom.
Right. The second thing you do.
Was that to your investors?
The second thing you do is you say, okay, how good is the opportunity? So for somebody like us, look, we've got about $22 billion in AUM.
Right.
We invested $4.5 billion in new investments last year. And we monetized, we realized $5.5 billion.
Is that going to be higher in 2025?
The investment dollars, the first 3-4 months, we've been much slower. We're waiting for this market to these prices to correct even more. But I do think over the next 3 years now, you're going to see, next 3 years, you're going to see a higher investing pace from us than the $4.5 billion a year.
One thing Victor, I wanted to ask you is the amend and extend. Is there a point, though, that there's going to be some shakeout and some mini crises, if you will, in terms of some of those firms that just kept getting pushed down, renegotiated, that ultimately they're going to go?
When you say the crisis, you mean for the company which does the amend and extend?
No, well, their exposure, right?
Yeah,
to some extent, I feel like there's a couple different ways you can play it. Like, I'm curious how that plays out, or does it get managed okay?
Carol, when I say a 5% default rate last year, that means 1 out of every 20 companies